to train the consumers. In the context of multiple SIM card, is transaction limit valid? I have 2 SIM cards. I can borrow using the Airtel, for example. But are the data on savers and on savers maybe and the borrowers shared with the banks, especially the savers? On the digital savings, for example, in one of the bank, you find the bank has only maybe branches in some limited locations, and it is providing digital savings. So I'm asking myself, this person in the rural area, if access that digital saving, will the bank follow up to make complete information about this person, given the fact that the bank does not exist there? How practical is sharing of digital borrowers' data? This I have already said it, the cross-referencing. Could borrower take large loans, taking large loans, graduate to banks? With respect of the interest rate, I think I've already talked about it. How fair is that? Given the fact that the payment, loan repayment is high, I would say, okay, let them also benefit because they are able to repay. In finance, when we say when you charge very high interest rate, people are discouraged to repay the loan. So we have to start thinking about that. Thank you.
Thank you very much, Professor Esther, for the insightful data and the analysis. We have learned about shadow players in the financial system, linkages with the financial inclusion, aspects of risks, the need to monitor MNOs, and the link between the MNOs and the banking sector, and the issues of risk management on the ownership of the SIM cards and multiple SIMs, insurance, and the like. I think there are a lot of things which this presentation has highlighted us, and I would like to encourage everyone to write his comments or her comments to the contributors, and those online, you can write your comments via the chat box, and our speakers and panelists will be able to respond when we are there. So in interest of the time, I'd like to welcome Professor Ulrich Wolz, who is joining us online from London. Professor, can you hear us?
Can you hear me?
Yes.
Yes.
Most welcome. You have 20 minutes.
Wonderful. So good morning, everyone. Hello from London. It's quite early here, but it's really a very pleasure and honor to be with you. And indeed, I could have traveled to Tanzania, and I hope I will be able to do so in the not so distant future. So let me just put up my slides. Hopefully, will be working now. Can you see my slides?
Yes.
Can you see my presentation?
Yes.
Okay, wonderful, great. So, I was asked to talk a bit about climate change and financial stability, and I want to highlight those the risks and the need for mitigating them, but also I do want to talk a bit about opportunities, very much also following up on a great presentation by Professor Ruma, highlighting new digital attacks. So I started my presentation in 3 parts. First, kind of the lead part, climate change, becoming impact and financial risks. So that's not that great, but there are indeed a lot of things that can be done and should be done. So in terms of mitigating risks and impact, and working on building a resilient and inclusive financial system in Tanzania. And to that end, I'll also highlight opportunities on the digital side, both in terms of enhancing analytical capability, also automating these, and then also with respect to raising capital for investment in adaptation and development. So first, I'll try to explain some of the impacts on financial risks. Pulled some charts here from a paper from the IMF, which looked at climate risk for Tanzania. All of you will know much more about it than I do, but so there is unfortunately kind of a global trend that we see an increase in the frequency of disasters, but also the intensity of disasters, and broadly we can see that trend also in Tanzania. The number of people that's affected is very significant. In some years we've seen millions of people being badly affected by different events. So flooding seems to be a major issue in Tanzania, but also drought. And there are really a host of different physical climate risks facing the country, and so the IMF, and I'm sure we'll hear more about that later on, does really anticipate that dry spells, heavy rainfall events are going to have a great impact on economic growth going forward. And in particular, there are some key sectors, including agriculture, tourism, infrastructure, and also the energy sector, that will be affected very significantly by climate change. So climate change does have an impact on our economies. It does have an impact on all kinds of economic variables, and it also does have an impact on the financial sector. And it's, by the way, not only climate change, but also broader environmental change that is involving all kinds of risks. And many of you will have seen similar charts like this before. So we do have physical risks, so chronic risks, including temperature rise, changes in precipitation patterns, sea level rise, and so on. But then also acute risks, so kind of climate disasters, nature disasters, and then on top we have transition risks associated with need to move away from high carbon activities to more low carbon sustainable activities. And these may be driven by policy changes, by new regulations, by technological development, and also indeed changes in consumer preference. And I think for a country like Tanzania, physical risks are very much in the foreground, but I've done a little bit of background research, and it seems like there's also some risks on the provision side related to the gas sector and so on. But in any case, we have these different risk factors, and they can have significant impact at the micro level of the economy, affecting individual businesses and households, but also at an aggregate level, macro level. And it's really critical to understand how the different ways of climate change can have an impact on different economic entities, on different sectors, and the economy at large. And so many of these effects are pretty straightforward. You know, you have another climate disaster that destroys property, creates stranded assets that disrupt businesses, that leads to loss of income, and all these different things can then also translate into financial risk, kind of a standard financial risks we're all aware of: credit risk, market risk, underwriting risk, operational risk, liquidity risk, first step is we really need to understand how the different risk drivers, how much they matter in the Tanzanian economy, and what the actual risks are for the individual financial institutions, for the financial system, and the market economy at large. And here you have a bit of a breakdown of different types of financial risks that can lead to losses for banks. You see not only the climate-related, which the weather event and so on, but also environmental risks like water stress, resource scarcity, biodiversity loss, pollution, and so on. That can also have an impact on the different financial risks. So there has been a lot of work going on in the last couple of years at central banks, at supervisors, and see systemic. So for some countries, physical risk will matter much more than condition risk. For others, it's the other way around. But climate change can cause some significant risk to the financial sector, and that's of course also why central bank supervisors and also institutions like the IMF are now paying much more attention to this. But the problem is that analysing climate risk, as important as it is also a fact. So climate risk is not analysing climate change is different from analysing traditional financial risk, because we need to be looking into the future. So with traditional risk analysis, we can use historical data, but we need to move forward looking analysis, and climate change is not linear. So patterns of the past may not hold the future. There's a great deal of uncertainty around how things will pan out. So we don't know, of course, how the emissions pathway of the world will play out. Are we heading towards kind of a 3, 4, 5 degree global warming scenario, or will we be able to somehow limit global warming to somewhere below 2 degrees? So there's a lot of uncertainty on the policy side, and that will affect how in which climate scenario we find ourselves. But then also, all these things are difficult to model. Yeah? So the models that we've been using in the past are not really fit for modeling climate challenges. The time horizons are different. So we're looking at the next 3 years, or 4 years, or 5 years. We really can have long-term analysis. So there are a lot of challenges involved. But it's absolutely critical that we really tackle those, and that we get to a point where we can much better analyze risk, which is necessary to mitigate risk and impact. So we do need financial institutions to really systematically integrate climate and environmental risk analysis in their risk management framework. This has become a major topic now around the world. So we need every bank, every financial institution to really be able to identify and assess and evaluate, mitigate and monitor, and also report risks that basically from climate and environmental change. And of course, financial institutions also need to account for these risks in their lending and investment. So there is a lot of homework for banks and other financial institutions on that side. But of course, we do need central bank and supervisor, Bank of Tanzania management, so it's critical that these guidelines are really followed up, that banks take climate change, also broad environmental change seriously. For example, develop their own stress testing capability. Stress testing has become kind of a major part of analyzing climate risks. Central bank supervisors around the world are introducing different forms of climate and also increasingly nature stress tests, which are working with a lot of central banks in developing these. I had a look at the stress testing guideline from Bank of Tanzania from 2006, so that, from 2022, which mentions climate only in passing, but so the guidelines that I also mentioned, they highlight that they need to become stress testing and mitigating. So at all levels, we need to build ability for better physical risk analysis. Looking at different pathways, so kind of different climate scenarios, what the physical impacts may be, or also what the conditions may be, and then model what the potential impacts may be for risks, maybe for individual financial institutions and the financial system as well. And I mentioned scenario analysis is really critical because we don't know what the future is. We need to think through different potential futures. We need to consider different provision pathways with different kinds of physical shocks, condition shocks, and then building on these scenarios, modeling. And this can be more on macro or micro meso level. But this will help us to identify vulnerabilities. So what will be, for example, the impact on capital, fraud and all that. So this is important for each individual financial institution, but also for the central bank and the supervisor to understand. And of course, supervisors also need to consider how to adjust the prudential framework. We've been having lots of discussion at the international level. For example, folks in Basel are really looking into how banking regulation should be adjusted. And given that this is usually a very slow process, it's quite interesting to see how rapidly things are happening in this space now, because there really is an understanding of these are serious issues. But I do want to also highlight that there is also a risk. When we look at climate environmental related risks and see that, okay, here are all kinds of risks for the banking system, and then banks take these risks into account in their lending decision, that we end up with actually worsening problems for financial exclusion. Now, again, we do want banks and others to take climate environmental risk into account, because that's what banks, risk needs to be managed. But there is a very large risk that banks will then say, okay, we're not giving loans anymore to seriously clients. And these often tend to be loans that are in the market anyway. So we do know problems, especially micro, small, medium enterprises, with accessing affordable financing from Professor Bruma about cost of capital, how difficult it is for many to access credit, And we know that climate change is disproportionately affected those at the base of the economic pyramid. The poorer households, micro, small, medium enterprises, they tend to be much more affected by the physical impacts of climate change. They have less resources, less ability to invest in climate resilience. And so if we have greater scrutiny regarding this, and there is really a worry that we end up with a negative cycle where greater attention to climate risk is leading to greater financial exclusion, which in the end could actually then make the economy less stable. So we've put it in terms of a vicious cycle of spiraling vulnerability. Actually, have rising critical risks, also condition risks, possibly unintended consequences of climate policy and regulation. Those then lead to rising cost of capital for poorer households, micro, small, medium enterprises, or possibly even a retrenchment of the financial sector, which means then that those that are financially excluded have no means to invest in resilience, in adaptation, or indeed also in cleaner technologies that will make them more competitive, and that could then lead to greater vulnerability of the real economy, which in turn may create a negative repercussions for the financial sector and the financial stability at large. So this vicious circle is a risk, and we need to work towards preventing it. And so we need to, of course, strengthen regulation to mitigate climate risk. We also need to do that in a proportionate way, and we do need proactive policies that can help those who are particularly in need of accessing adaptation finance, also transition finance, to get it. So we need to try to move towards a virtuous circle of growing resilience. So we have more investment in adaptation, also clean technology, more insurance services against physical risk, for example, the agricultural sector. This can then lead to enhanced resilience to different physical and condition shocks, and also to greater competitiveness. That in turn may then lead to lower credit cost, and help them to further accelerate this virtuous cycle of growing resilience. So we need to try set up a virtuous cycle of really resilience and supporting policies. So we need to mitigate risk. We need to reduce information costs, which is critical for financial institutions to be engaged with those that are financially excluded or at the margin. And of course, we also need more affordable finance to really help set up the virtuous circle of.
Professor, you have 2 minutes. 2 minutes.
So we worked a lot with the Alliance for Financial Inclusion, of which the Bank of Tanzania is also a member. And we got the policy framework, inclusive green finance. I won't have time to go into that, but there are a lot of ways how also central bank supervisors can work with the financial industry in helping to make more inclusive green finance framework, a more inclusive green finance framework, so to really also help poorer households, small corporations to access adaptation finance or condition finance. And let me use my last 2 minutes to highlight also the potential of digital sustainable finance in all of this. As Professor Isiguma highlighted, finance is becoming increasingly digital, and that also involves a lot of opportunities. besides some of the problems that you mentioned. And so in particular, we can make use in a much better way, much more comprehensive way of all kinds of data, including first observation data, textual data, data from the industry of things, all kinds of energy consumption, emissions data, mobility data, and also find asset data. And there are many ways how we can make good use of these data to improve analytics of climate risk, and also how we can find new ways of developing financial services that will really help broader part of society to better deal with climate. So on physical climate risk, for example, we can use first observation data, asset geolocation data to have a much better understanding, much granular understanding what the physical are. We can also work towards automating risk analysis. Here's an example from Brazil. I've been working with the Brazilian central bank on this kind of stuff. Won't have time to go into this, but we need to bring down the cost of risk analysis, because if the cost is very high, financial institutions will in trouble dealing with small players. There are also really great examples of how you can use digital financial service to, for example, boost investment in renewable energy. So from Kenya, where you all know a lot has been happening between COFI, which is basically a leading service for solar panels, so households and corporations can put a solar panel on their roof. They can get cheap energy and again really create their own thing. Financial risk management, because the provider uses mobile banking data, so have a kind of credit record, and things like that can really. And then, very final point, digital solutions can also be used to help domestic financial resource mobilization. And again, we've had some great examples from Kenya, where the central bank issued, they were the very first one to do that, a bond through mobile phones, where small households could purchase in small quantities bonds, and these could be used to raise capital for green investment. Others have done similar things. Monetary Authority of Singapore issued last year in a similar way green infrastructure bonds, and I think there's a lot of opportunities also that can help make the economy, make individual financial corporations, and also the financial system more resilient to climate change. And with this, I end my presentation, and thank you so much for having me.
Thank you very much, Professor, for the very insightful comments on the climate change and financial stability. Tanzania being a agrarian country, I think the issues you mentioned on disaster management, its cyclical nature, and the risk factors affecting the macro businesses and the households, and ways to mitigate this. As its effects to the credit operations, liquidity risks within banks and financial services, and the fact that these climate change risks are difficult to model, to predict, and that it's important to have a risk management framework to evaluate, mitigate, and report these kind of risks. But also we have seen that the Central Bank of Tanzania has already issued some guidelines on this, as well as the Bank of International Settlement, as well as aspects you mentioned about capacity building and the risk in the lower end of the microfinance institutions and the capacity to mitigate the climate risk at that level. $1 million question is on issues on the M1O digital, whether also they can consider climate change in the loan offering. Also talked about the vicious cycle of spiraling vulnerability, spirating vulnerability, and growing resiliency, as well as the need for policy framework for inclusive green finance, with issues of stress testing for climate change risk and the linkage to the digital platforms such as those you mentioned about MCOPA to finance the green financing, climate change, as well as digital bonds through the digital mobile platforms. With these two presentations, I'd like everyone to stand up so that we can have a bit of exercise. Please stand up, stand up, stand up. Raise up your hands. Down. Up. Down. Across. Left, right, left, right. Let's get seated. Okay, I'd like to remind everyone, if you have comments, those online and those attending here, please pass your comments to our ushers, and for the online through the chat box of the online platform. Now, let me open up to my panelists here. I'll start to my further left, to Dr. Masood. We have heard a lot of these innovative solutions, and we'd like to know how best financial institutions can manage customer demands, financial demands, in terms of crisis, in terms of disasters, climate disasters, and the like. Most welcome. You have 5 minutes.
Okay, thank you, the chair of the session, and also And also thanks the organizers for inviting me as one of the panelists on this very important conference. Now, first of all, a good number of my examples will come from the bank which I was leading until 1 month ago, the People's Bank of Zanzibar. You know, we were discussing yesterday with one of my colleagues that since the presentation started yesterday and this morning discussions, it seems as if most of our points have been already discussed. Therefore, we have to be innovative so that we come with something new. Now, when we are talking about economic crisis facing customers, I can say that they could be looked at 3 scenarios. There could be some problems facing the specific bank, but will also impact the customer. But there can be also crises that involve the customer himself or herself or the firm of the customer. But again, there could be some general economic condition which affect all of them together. Now, when we are talking about customers, customers actually are the primary stakeholders. For the banks, there are various stakeholders, but customers are primary stakeholders of the bank. And the relationship between customers and the bank, we can say it is two-pronged. And most especially for commercial banks, because for commercial banks, they can take loans or financing, but also they are very important on the other aspect, they are depositors. And when we look at the commercial banks, most of the funds or the money that we are using are coming from the customers. Therefore, safeguarding their interests during time of crisis is of paramount importance. Now, one important aspect to start with is to have a proper governance structures that will ensure that the interests of customers are safeguarded during the times of crisis. But also for the players in these institutions, in the banking institutions, to make sure that they do everything for the interests of the institutions and the interest of the customers, not their own personal interest. Someone asked me that, okay, the bank, you have been at the bank, it has been progressing well. What is the secret behind good performance? The secret behind is to do everything you are doing, every decision you are making, every act you are doing for the interest of that institution. And in that case, you will also be safeguarding the interest of the customers. Now, Coming back now to the issue, what are we going to do? You know, before the crisis occurs, we have to prepare for it. And that is why in the banking industry, we do stress testing for the various factors quarterly. Liquidity, capital, even the strategy is supposed to be, we are supposed to do the stress testing on the strategy. And thanks to the Bank of Tanzania, they also issued that regulation. And come up with the solutions so that when the problems occur, what are we going to do? But again, it is important to align the whole team from the board level to the management level. What are we going to do when these crises occur? And to have the contingence planning. For example, we have in the banking industry disaster recovery sites, so that if anything goes wrong, then you can continue operations. But I can give you one example. During my tenure as the CEO, we had a discussion in the management. Should we go to the cloud? And it was not supported. Only the head of ICT and myself supported. But believe me, it helped a lot during the time of crisis. Because now we have these cyber attacks. And they once happened. I cannot mention among the banks I led which one, but actually that helped us a lot because we could continue with the operations. And coming to the evening, even other services were restored. Therefore, the preparations are very important. But again, when you have this economic crisis, as I've said, whether the problems are within the bank or to the customer or general economic situations, to have flexible payment options. This happened even during the COVID period. But the example I'm going to give you, it was not during the COVID time, because we have to look at these customers specifically. I remember we once made a decision where a specific customer who was facing serious business problem to restructure the loan for some years cost-free. Then you rescue the customer. But again, when we talk about digital and remote services, these are very, very important to manage customers during the time of crisis. I can give you an example. In Zanzibar, at the People's Bank of Zanzibar, we had an issue with what we call the pension jamii. You know, the revolutionary government of Zanzibar is paying pension to all the elders, which is called the pension jamii. And these elders, sometimes they are missing their payments. But then when that issue was brought to the bank, and because we had a lot of agents in every part of Zanzibar, that helped a lot. But that helped at that time because we made that decision previously to have these remote services. Going quickly, I know the chair is still saying the time is up. Because we have also communication and the transparency to our customers, continuous monitoring and adaptation. Financial education is very important. At the time, for example, we are currently facing the dollar problem. But most of these customers, really, we need to sit down with them to educate them what is the problem and how are we going to help them. You know, there was a time, there was a confusion between the dollar for sale and the dollar liquidity. In a bank, you can have a lot of dollar from your customers, but they are not there for what? For sale. And some customers think, why don't we get these dollars? Therefore, education is very important at the time of crisis, but also collaboration with the government and NGOs. And the last item I want to mention is empathy and compassion to our customers. We really need to engage them, to have discussion with them on how we are going to solve their problem. And a lot of points here have also been mentioned about education, to have a focus group, but also we need to train our staff in these times of difficulties on how are they going to deal with the customers and educating these customers and solve their problems. Thank you very much.
Thank you very much, Dr. Masood. I think the main points here are customer-centric, institutional-centric, alignment of the strategy to the board, employees, and the issues of stress testing even to the strategy, and additionally financial education and collaboration, as well as customer empathy, which is also customer-centric in times of crisis. Let me now invite Dr. Gorgios Genimakis from IMF. He's online. Are you there? Can you hear us?
I'm here.
Is joining us from Dar es Salaam?
Yes, I'm here. Yes, I have joined. I can listen to you properly.
Okay. Based on your experience, are there any regulatory and supervisory approaches to be considered during financial and economic shocks for a developing country like Tanzania?
Okay, so if anybody else could mute, because I can hear like a lot of background noise, I would appreciate it. Thank you. Good morning also from my side. Can you hear me properly?
Yes, we can hear.
Yes. Okay, great. Good morning. Thank you, Dr. Zbai, for the interesting question. First of all, I would like to thank the Bank of Tanzania that invited me in this conference and congratulate you on the excellent setup. It's glad to see all the participants from all these diverse backgrounds that have joined in person in Arusha. Unfortunately, I couldn't join, so I'm joining remotely from Dar es Salaam, but still in Tanzania. My name is Georgios Denimakis, as you said, and I'm the Financial Sector Supervisor Advisor in the IMF Regional Technical Assistance Center in East Africa. We are based in Dar es Salaam. Just like very quickly, a few words for those who are not familiar with the concept of technical assistance centers. The IMF has like 11 regional centers, 5 of them there in Africa. That we try to build like human and institutional capacity through technical assistance and trainings. So as I said, we have like 5 technical centers, regional centers in Africa. The oldest one is the one that I'm working in, the Africa East that I mentioned, that was established in 2002 in Dar es Salaam. We're serving at this moment like 8 countries, including like Tanzania in East Africa, and we cover like several areas from fiscal management, fiscal analysis, monetary aspects, FMIs, debt management, customs, tax administration, and of course, including financial sector supervision that I'm working in this area. In practice, like we provide like support to the regulators, not only to bank regulators, but also insurance and security markets regulators. And our aim is to enhance financial safety of course, have like financial stability in the institutions and the broader financing system. Going back to your very interesting question, I wish I could have like more time to elaborate more on this, but I will try to be quick. Of course, like regulatory and supervisory process during financial and economic shocks are very important. So there are very many foundation items that have to be developed. And as correctly mentioned also in the previous session from Dr. Musin Salim Masood, that we have to do a lot before going into a crisis. So indeed, there are like many items to be done, and these measures have to be related with, of course, and the foremost is like prudential regulation, legal frameworks, supervisory practices, stress testing that has been highlighted in all sessions so far, risk management frameworks like the ones that has been brought up, and they give like information and guidance to the instances in all countries. I will highlight another point that was mentioned also like by Professor Volz, that cooperation among macro-prudential and micro-prudential is important. So it cannot in pure micro approaches. So we want like many people to interact. So we have like coordination between several authorities, monetary, fiscal authorities, market discipline, transparency, for consumer protection. All these concepts are very important in order to build confidence and foster market institutional resilience. But if I had to highlight like a couple of points, I would focus on the regulatory frameworks and supervisory approaches firstly. But what do I mean by this? As we all know, the regulatory frameworks have undergone through significant changes over the last years. And this was the result and from the lessons learned from all the financial crises, the advancements in technology, the evolving standards. So we have like very notable changes in banking supervision, and BCBS is working on this one. New Basel standards with more stringent capital liquidity requirements. Also new regulations on IML, cybersecurity. We mentioned, it was mentioned in the previous section that we have like many cyber attacks. So we have like to build like resilience in this area. Fintech, e-money, agency banking, all these things. They're bringing like a lot of work, a lot of homework to both the bank side, but also the regulators. Also, the pandemic has tested a lot our operational resilience and our strengths and weaknesses. And we need like constant efforts from all sides. In the previous very interesting session on climate risk, there's a lot to be done by the regulators, by the banks. Climate risk is across the board affecting like all risk areas. So many things to be done, and also IMF is providing like a lot of TA technical assistance in order like to incorporate the climate related financial risks in the banks to enhance the supervision advisory processes, stress testing, of course, but keeping in pace with all these aspects and considering also the proportionality aspect, because many of these things they have like to be translated in the context of the African countries is a major challenge. But Basel III has done a lot of work on the macro aspects and addresses a lot of the economic cycles of the financial systems. We have like many buffers that came in place, like the systemic buffer, the counter-cyclical buffers. That is the responsibility of the stellar banks and the supervisory authorities to adjust them, and of course, like to increase or lower them in order like to release the buffer when there is like a downturn and absorb losses. But also supervisory approaches, risk-based supervision, like focusing again on key risks is very important. Again, something that has been also highlighted in the past, in the previous sessions, post-crisis regulation. It's very important to have like post-crisis regulations in place because we have like to be very proactive. And when we speak about post-crisis, we mean like in the banking sector, for example, how to resolve a problem bank and how to enhance banking loans and frameworks and resolution, crisis management, recovery plans assessments. But all these things, they have to be in place. Because they are also like very important to have like resolution mechanisms and also insurance schemes. But we should never forget that the foundation is a solid banking supervision that should be in place. What I mentioned earlier, risk management frameworks. It's very important that the supervisory authorities, they have like they're issuing guidelines like the one that was mentioned about managing climate risks, how to manage, how to identify, measure, control, report, and mitigate all the risks that they may be relevant to the banks in order to have like sound practices. Stress testing. This is a very important tool that has been that is in the toolkit of both the supervisors but also all the banks. We're using like stress testing on pre-crisis but also during crisis, scrutinizing balance sheets. So the regulatory authorities are doing like their top-down stress testing, which is something on top of what has been mentioned earlier. So we know that the banks are doing their bottom-up stress testing, especially in the Pillar 2 documents. And I was glad to hear that the People's Bank of Zanzibar, they're doing that thing on a quarterly basis, which is a good thing under like severe but also plausible scenarios, but also as I said, top-down stress testing, macro stress testing for all risk modules should be there from the regulators, and we need like cooperation between the supervisory authorities and the financial stability departments.
Please conclude.
But cooperation not just within the central bank and supervisory authorities. It's also important to have like cooperation with other authorities. With consolidated supervision is an important area. We know that in the past it was not that case so much relevant, but now we have like the internalization of many banks. So it's a basic principle of bank supervision that we examine the totality of banks' business work. So we are promoting cross-border supervision colleges within the countries under joint teams. It's very important to have like principles for exchange of information, aligned policies, memorandum of understanding. It's very good, but also benefiting and also like we're encouraging going also to international organizations like the IMF or the World Bank, fostering collaboration efforts between among themselves. This is very good, and take profit out of this this one in order to stabilize and get like support and address any kind of risk, systemic risk that may be there.
Okay, we are running out of the time.
With all
Can you conclude with videos?
Measures play a pivotal role in safeguarding the stability. It's apparent that all these approaches during financial economic shocks should be in place, and the authorities should have a multifaceted strategy in order to achieve the target. There are things to be done. Many of them should be done before a crisis comes, of course. So it was good to hear like also about the business continuity plans, operations resilience in the past. And we have like to be proactive, coordinated regulatory approaches to safeguard stability and promote our long-term economic growth.
Okay. Okay. Thank you very much. We have heard about several aspects regarding this, including the human and technical capacity building you are providing, as well as issues of risk-based supervision and the cross-border supervision and the role of banks and regulators, and especially the issue of climate risk mitigation. And also you said, you stressed on the issue of stress testing. Oh, let's return to the room here. Thank you very much. Let me now ask Dr. options to manage and mitigate risk in the banking sector, and if you can share some insights from your experience. Thank you.
Yeah, thank you, Chair. I don't know if I can. Yeah. Okay, yeah, thank you. Now, let me start by thanking the Bank of Tanzania for this invitation, inviting me as a neighbor to come and join you on this conference, whose theme is apt for the times in which we are actually living in. Now, just going straight to the question that was put to me, I think when you're talking about regulatory compliance frameworks, this necessitates the establishment of a robust risk management practices that help banks, to identify, be able to analyze, report, and mitigate risks. Now, mitigation of risks in banking sector depends largely on the type of risk that you're talking about. And I think from Professor Ulrich's presentation, he analyzed the various risks that banks face. If you're talking about, for example, credit risk, you will basically, in terms of mitigating them, you just require a very well-structured credit information sharing mechanism that can then be used by the credit provider to be able to mitigate the risk. When you're talking about market risk, again, is an issue of diversifying their portfolios, balancing their portfolios to ensure that they are able to manage that pretty well. Operational risks, on the other hand, I think they come from such ventures like, for example, you've got cyber attacks on the digital platforms, and in order to mitigate this, you just require a robust monitoring system and, of course, invest in the staff capacity to be able to manage and monitor the system to ensure that you seal any loopholes that may arise. When you're talking about liquidity risks, it's an issue of ensuring that you set minimum thresholds above which banks then should operate to ensure that they can be able to withstand any shocks that come into the market. Compliance and reputational risks, again, those ones are there to ensure that banks remain compliant to the regulations that have been stipulated or any requirements that have been put in by the regulatory framework to ensure that banks are always managing their risks on a distributed platform. Now, the current global trends, I think, have witnessed an adoption of emerging risk management techniques. And I'll not go into the details because this, I think Professor Ulrich in his presentation and even Dr. Masood mentioned about, and actually almost all the speakers have talked about stress testing. This is becoming almost like our bread and butter in the banking sector. We're talking about predictive analytics that now banks are beginning to use, not only to be able to manage their, businesses more efficiently and more effectively, but also there is the issue of using the same techniques to be able to identify and mitigate potential risks that may infuse into their banking operations. Of course, one of the other issues that has been brought up clearly was the issue of climate risk. And I think climate risk is affecting us in ways that we have not been able to assess before. It's filtering into all the various risks that you have mentioned. It's filtering into credit risk, it's filtering into the liquidity risk, it's filtering into operational risks. And therefore, we need to be alive to the fact that it's changing the way we have been managing our risks. The question that comes to mind is, do developing economies have the capacity to currently measure and mitigate, to support regulators to ensure that by absorbing them into your risk management profile? Now, in Kenya, for example, the Central Bank of Kenya came up with a guidance on climate-related risk management guidance for the commercial banks in Kenya. This was in 2021, and banks were meant to put the frameworks into place to become effective 2023. One of the requirements there is disclosure to the central bank. Now, what we did as the association was to support member banks to be able to align themselves to being able to report to the central bank as per their guidance. Now, what we did, therefore, we formed a committee, and with the guidelines from the task force on climate-related financial disclosure, we were then able to put in place a template that is currently being used and therefore helping banks to be able to be compliant to the requirements of the central bank. In fact, we launched this template during the climate week that was held in Nairobi last year. Now, recognizing the fact that the banking sector rates typically evolve, and with advancements in technology and in terms of the business models, the other players, including ourselves as associations, including the central bank, including the players, will also have to welcome new and innovative mechanisms of managing and mitigating these risks. We have talked about artificial intelligence, we have talked about machine learning. I think those are developments that are coming in, and banks are not any different from that. In order to be able to serve your customers more effectively and more efficiently and meet their needs, you have got to adapt onto these technologies. But they come with a risk. And you have to be cautious of the fact that the risks have got to be managed.
1 minute,
Thank you. Conclude? Now, if I can just quickly go into giving some examples, that I think the example that I can give is in Kenya, during the COVID, we saw some regulatory, should I call it regulatory innovation? There were a number of measures that were taken by both on the fiscal side and the monetary policy side. On the fiscal side, of course, tax measures and expenditure by the government to try to allay some of the challenges that the populace was meeting. But I think let's look a little bit more on the monetary policy side. Inflation was the risk. Currency pressures were coming in, and therefore the natural response from the monetary policy side would have been to tighten. But what did central bank do? On the contrary, they actually loosened. The central bank rate was taken down. The cash reserve ratio was taken down, releasing liquidity into the market, essentially to support the market to be able to support the populace who needed some cash into their pockets. The other thing was IFRS 9. The measures that were taken by central bank was contrary to the expectation of IFRS 9 because they were effectively being allowed to, rather than impair the assets and therefore take provisions, they were actually being given some leeway to ride the customers through the pandemic and then subsequently then be able to do that. So for example, things like, for example, the repayment profiles, where banks were actually allowed to extend the repayment profiles of these customers to give them some breathing space to wade through the COVID-19 pandemic. So there were a number of innovative regulatory frameworks that were put in place to ensure that during challenging times we are also able to ride through. Chair, if you can just allow me to give just one example.
We are really out of time.
Just to illustrate the point.
Sure.
The fact that the regulation plays a significant role in terms of supporting innovation. And I'll give you an example. I'm picking the example of M-Pesa. M-Pesa came into operation in 2007. The regulatory framework that allows central bank to regulate a platform like M-Pesa was enacted in 2014. That was 7 years after M-Pesa came into operation. So for a whole 7 years, M-Pesa was operating without a proper regulatory framework. But that's a risk that the regulator took. And you can see the impact that M-Pesa has had, not only on the Kenyan economy, but regional economy for that matter. So I think there is a need sometimes for being innovative in terms of the regulatory approach to support innovation, even though we know that innovation sometimes introduces risks, which then you need to manage.
Okay.
I think I'll stop there, Chair.
Thank you very much. You talked about the issues of role of banking association for capacity building to support the regulatory compliance, as well as the new innovatives such as the artificial intelligence and machine learning and the deregulation. But you say that innovations sometimes are ahead of regulations. So let me invite Geoffrey, who will tell us about how best the banking industry can build the resilience and what are the challenges. Most welcome. You have 5 minutes.
Well, I thought, thank you, Dr. Swai, for this opportunity. I think for me, before I talk how we can build resilience, allow me to borrow from the saying which says you can't talk about the day if you didn't experience the night. And the night for us as a financial industry in this theme today is the 2008 financial crisis, the 2020 health pandemic, but also the recent and the ongoing heightened economic uncertainty which is going on globally. And this indeed requires us to set strategies which can help us to continue remaining resilient as a banking sector. And I think a lot have been said. Some of these strategies which I wanted to mention help us to integrate our framework with the sustainable banking, taking into account the environmental and social risks. Already there's quite a lot which has been mentioned about the stress testing, so I don't want to repeat or add anything there, apart from the fact that if we continue to do stress testing adequately, and I'm glad that Central Bank has already introduced this requirement since last year. So we are doing stress testing, not only on the Zanzibar part, but it's the whole of Tanzania, and this is on the quarterly basis. So that will help us to check our health check for various scenarios, very important. But it's important also for the banking sector to be conducting a scenario analysis so that we can evaluate and identify the various unique vulnerabilities which we are facing as financial institutions. But what we have not covered is risk appetite. So important for the players to define and communicate their risk appetite, but added to that, which is very, very important, we also need to define our risk culture. The world is evolving, we are seeing a lot of misconducts, so it's important financial position and whether banks are complying to the very good regulations which are set to ensure that we remain resilient. Wow. I just wanted also to touch on the enhanced supervision. We understand that Central Bank has already identified the domestic systematic important banks, and in that, we need to see what is it that these 7 banks need to comply to ensure that there's no contagious effect when there is a shock in the market. We talked about resolution planning, so I'll not repeat that. AML and CFT, we talked about it. But consumer protection is also very, very important. I think Dr. Musin somehow spoke about that. Collaboration, very, very important between the key players. I also want to echo the discussion on capital adequacy, very, very important. And here again, Central Bank has established the ICAP requirement, and we're doing a parallel run, which is a good progress from the right direction. So important to look on the capital requirements, capital buffer, capital conversation. I think the IMF, doctor from IMF spoke about it. Capital planning, very, very important. Corporate governance as well is very, very important consideration when we are looking at the strategies to make sure that we have a good mix of the members of the board from the diverse sort of expertise, and that they have efficient and effective oversight. And the last point which I want, and maybe I will recoup some of this time in the follow-up question, Doctor, if you can allow me 1 more minute, is on the diversification. I think this one we have not talked about it. We as financial institutions, we need to consider diversification in all that we are doing. The loan portfolio, the asset class diversification, the product diversification, very, very important. Funding diversification, it's very, very important, but also who are our counterparties? Are we just facing 1 or 2 who, if they are into a particular challenge, we are also facing the challenge, but risk diversification is also very, very important. And last is on the wider collaboration with various stakeholders, including the Bankers Association. What is it that we are doing? Are we participating? Are we doing the research required for us to make sure that our industry continue to remain resilient? Let me stop there. Thank you.
Thank you very much. Let's clap for the thing. Yeah, we are real out of time, but you mentioned a lot of good insights, issues of risk appetite and the risk culture, also diversification in funding and governance. Let me now invite questions from the floor. We'll start with those online. Can I have 2 questions online?
I have 3 from online, and allow me to ask them quickly, interest of time. Question 1 is Patrick Musa. With reference to the market analysis presented by Professor Esther Ishengoma on the varying interest rate pricing of loans, could the adoption of risk-adjusted interest rates pricing improve the level of financial inclusion by reducing those who are regular consumers while ensuring those who are excluded to seek inclusion? With reference to the market analysis presented by Professor Esther Ishengoma on the varying interest rate pricing of loans, could the adoption of risk-adjusted interest rate pricing improve the level of financial inclusions by rewarding those who are regular consumers while enticing those who are excluded to seek inclusion? And 2 other questions from online. Orbit Securities. How do you ensure financial stability where the key market segment, FX market, is facing rationing, meaning the failure of market forces? How do you ensure financial stability where the key market segment, which is the foreign market, is facing rationing, meaning the failure of market forces? And the final question from online, with a loan deposit ratio for key dominant banks in the country, how is the Bank of Tanzania preparing to mitigate potential liquidity crises in the unlikely event of external shock? With the loan deposit ratio for key dominant banks in the country, how is the Bank of Tanzania preparing to mitigate potential liquidity crisis in the unlikely event of external shock?
Ishengoma, can you respond to the first question quickly? 1 minute.
Yes, on the issue of pricing or price differences when it comes to interest rates. Here I think is where we are calling for maybe the analysis of more data, because as we have seen, there are differences. And let me say, because if you look at the provider, for example, the MNOs, let's say, let's ask ourselves, are the MNOs maybe still doing more investment in a way that they require returns to be able to cover those investments which they are doing? Looking at the interest rate being charged, how is it shared among the MNOs, maybe the fintech which are behind, and the banks? Because when it comes, for example, to failure of the borrowers to repay the loan, then how is the cost of failure being shared? Are the MNOs also taking the shares? Are the fintech taking the shares? Are the banks? Because what we understand at the end of the day, the bank might write you off, okay? But again, that will result in moral hazard, yeah? The bank just being writing off. And when they write you off, it means it's the depositor's money that is being lost. Now, when it comes to the pricing, I think we have to look at it. And maybe as we move forward, we need to find a way where maybe we can reduce
I know there is kind of, I don't know, is it a secular or whatever, that the microfinance institutions might be required not to charge more than 4%. Now that's where the required interest, the adjusted, is coming in. And then by charging that lower, might also increase the confidence of the people to continue borrowing, doing this. I mean, taking the digital loans, because you attract more people to take the loan. I think that can result into that. And again, I might end up by saying, let's also the borrower, because of high repayment rate we have seen, more than 95%, let's then also, I mean, share the dividend by charging them at least lower rates.
Thank you, Professor. There was issue of loan to deposit ratio that it has been increasing. Can I ask Mr. Mchangila to respond on that, and Dr. Masudi will respond on the foreign exchange market failures?
Thanks. So on that question, I think it speaks about what I was actually trying to highlight on the strategy, that for any financial industry, then the regulator will try and establish the domestic systematic important banks, meaning the banks which, by any means, you have to make sure that they survive for the industry to continue to survive. So have we done so? Yes, our regulator have done so 2 years ago. They have identified 7 domestic systematic important bank. They're putting together a framework which will govern this. And I was also talking about the enhanced supervisory framework for this systematic domestic important bank. So that is very, very important, because regardless of whatever you're saying, as long as the enhanced supervision is done, then you are assured that the industry will continue to prevail. Just to add some other points into that, and on the liquidity side, so what is happening, the regulator has also come with some guidance on the liquidity coverage ratio. So we have some new mechanisms of making sure that beyond the deposits which you're saying on the GL ratio computation, then at any point in time, each and every bank is using the only required deposit to extend the loans. So with these very severe sort of ratios, they will help us to comply with the Basel requirements, which is very good for the industry. So I think going forward, yes, there has been an increasing trend when we look at the financials, but we should not be scared, because the guideline and framework is in place to protect the industry. Thank you.
Thank you. Dr. Masood, can you say something on the foreign exchange market forces?
Okay, thank you, Chair. I think it is a very difficult question, but I will try just to give some few sentences. I hope in this room there could be others who can answer this question better. Yeah, my answer to that is that we increase the exports and reduce imports. In the long run, then we will be saved. Thank you. But there could be some other elaborations from others.
Let me have Changila to add on that.
I think he is from Treasury background.
I have no. Okay. Thanks, Chair. I think just to add it, first of all, this is not a unique challenge to us. Most of the emerging market countries are facing similar challenge. I think yesterday, during the first presentation, Cosmos Kimayo did actually highlight some of this sentiment. So one, it's not a unique issue for us here in Tanzania, but second, what is it that we are doing as an industry, as a country? So there are both monetary as well as fiscal measures which have been implemented to try and address the the short, medium, and long-term sort of solutions. In the short-term end, I think we have seen a number of interventions, including the reforms which were announced by the Bank of Tanzania last year. But also, there are other initiatives which are meant to improve on input substitution. You have heard about our focus in improving the agri sort of output. We are importing significantly on, say, edible oil, and now we have an initiative to make sure that we increase investment in that area. We are also increasing investment on irrigation, which will help us to increase our export from the agriculture, but also a number of other reforms, which if we have enough time, we could go one by one, but I just wanted to cement that, one, this is not a unique issue for us here in Tanzania, and two, the important is for us to see what is it that we can do on short term, medium term, and long term, and those have been done. The industry has been engaged by the regulator. Various stakeholders are engaging in various discussions to see how best we can address this issue. Thank you.
Thank you. He was clever to take my microphone. So let me invite comments from the floor, discussions.
Interest in time, we'll only be able to take 2 questions. We have one hand here and I think one hand there, and allow us to continue with the discussion and engagement of a tea break. Martin.
Thanks. My name is Martin Warioba from Warioba Venture. More question to the panel regarding the high interest rate. So I'm a big advocate for consumer protection, and I believe we should protect consumers, especially the underserved that we bring to the formal system. I also agree that financial institutions, both banks and non-banks, can do better with data analytics and segregate products for different customers. So I fully support the data analytics comment that has been issued. But my question goes to the wider stakeholders. Because we understand the high interest rates are there because of the risk that is in that process. And when we talk about de-risking the process, it's beyond financial institutions. So I'll give 2 or 3 examples that I think some of the areas that we also need to address, but I didn't hear that being mentioned, and maybe I would like to hear the panel observations on those. One is on the legal and regulatory framework. We know sometimes also the borrowers, as much as 95% repay, but the defaulters are there. And sometimes the law protects the defaulters. So when you default and you start collecting, they can quickly run to the courts, put injunctions. And that's probably one of the reasons why that high interest rate is there, because sometimes financial institutions want to accommodate for those defaulters or in advance. So how are we looking at that, and how can we address that in supporting, holistically, to support the whole financial sector? And I'm asking that question taking note that there are honorable parliamentarians in front of us. Second, how can we incentivize the credit scoring system that we have for those defaulters? Are we willing to blacklist them from credit bureaus so that financial institutions know they are only dealing with clean borrowers, and there is that incentives? The last part, it's also to add incentives to the wider sector. So for example, we've specifically put forward, we want to support agriculture sector, MSME sectors. Can we provide incentives for financial institutions when they actually processing payments or including these people into the systems? They can be incentivized some of the cost. A good example, we all need to do KYC, and we know NIDA has to be sustainable. They charge a fee, and it's fair for them to charge a fee. But can we incentivize anybody, fintech, startup, bank, MNO, any program that is dealing with smallholder farmers, underserved communities, MSMEs, maybe they get a waiver on NIDA fees, maybe government subsidize for that KYC check. So you don't fail to serve the community because there's also a lot of high costs in that pipeline. Thank you.
Thank you.
Final question from the audience, and then we'll take the rest of our tea break.
Good morning. My name is Julius Rimo from the Financial Intelligence Unit, Tanzania. My question is, how do banks balance in terms of the effort to increase earnings, to increase their profits and reaching their targets, and protecting the bank from taking illicit proceeds from many crimes, corruption, drugs, and whatnot, and also from being used by shadow economy, let's say being taking money from Hawala, which is operating underground, and passes through the bank and then to Hawalada, the agents. And this, you should take note that Tanzania, Kenya, and many sub-Sahara countries are in the grey list of FATF, which is Financial Action Task Force. And one of the items is that banks don't comply on MLCFT issues. Thank you very much.
Thank you. Moderator, over to you.
Thank you. Thank you very much. The last question, I'll ask Changila to respond on that brief. And the other one, Professor Shengomo. It was about the issue of high risk vis-a-vis financial compliance on the incentivizing the credit scoring.
On the issue of credit scoring.
Can you put the mic closer to the mouth?
Okay. Yeah, we are talking about, you say, protection of the consumers, but at the same time, we have high risk, and we understand the digital loans, which I have just presented, most of them are not secured, and that's why the providers are making arguments that they have to charge high interest rate because the loans are not secured. But what I can say is that based on the experience, yeah, they are not secured, yes, but we have seen high repayment of the loan. Okay? And that is since we have made the analysis, and that is since, let's say, 2019. It's about 5 years analysis. And in some of the providers, they have even indicated it's 100% paid. So if it is 100% paid, could still we say we still continue to charge them very high interest rate? When I say very high, imagine someone borrowing the money, maybe it's just like an overdraft. Within, let's say, 6 hours, because we have these people who have been trying. You borrow 50,000, maybe at 7 in the morning, because you don't have access to, and you want to do something immediately. And at 12, you repay. But when you are repaying, you pay with 6,000, you know, you borrow 50, but then you pay the total amount of 56. So within 6 hours, you have paid 6,000 as including the cost, all the costs. So again, is that what we are calling fair pricing? And if they have been paying anyway, we have also other borrowers. When we analyze those who are taking even bigger loans, you find they are paying, maybe the payment is about 90%. And you say these are risky clients because it's not secured, but the repayment is 100%. The repayment is 97%. And you charge them, if we convert that 14%, what I have shown, or 24%. That 24% is per month. Now multiply by 12 if it is per year. But the one who is repaying maybe 90% repayment, the interest rate per year is maybe 25% or 16 to 25. But this one who is repaying 97%, the interest rate is about 200%. So what is what? Should we still maybe put ourselves behind and say, these are very risky, but they're paying, yeah? Let's look on the modalities of looking at those data and say, let's moderate this. They are risky clients because they don't have collateral, but still they are paying. Let's look on how to advance on this. On the issue of incentives, yes, we have seen some of the incentives being paid. For example, bank guarantee, as we have seen. Those are some kind of incentives. If you are targeting these clients, sometimes you get access to the guarantee. We had yesterday the agricultural. They are accessing maybe the loan from the BOT at 3%, and they are going to lend at a given percent. Those are kinds of incentives being provided. So we can say they are being provided. Maybe we can look more. And what I'm saying, we have to do this, all of us. Is not just the role of the central bank. We have to work together as all the stakeholders to be able to find the solutions. Thanks.
Thank you. Changila, can you respond very brief on the balance of the profit and the target claims via shadow economy?
Thanks, Chair. I think you had given me another question, but anyway. So I think we very transparent, and there's a requirement for financial institution banks to be transparent to the wider public. So there's a requirement for us to publish our financials on quarterly basis. The financials have been audited. But also there's a supervisory and monitoring tools. And let's just be honest with each other. So banks are investing to make sure that they also maximize return to their shareholders. But if we are doing so, then we are conscious of the consumer and customers who we are serving, and hence the consumer protection regulation, where we are disclosing all the aspects of the products which we are offering, including the fees and various charges which we are charging on the products. And this is actually published on the newspapers, so that all the consumers can see where they should go in terms of the best service. So I think that is a very wider discussion topic which requires a separate sort of session. But I just wanted to say that from the financial institution, there is a transparent way of communicating to all the stakeholders. Thanks.
Thank you very much. You will agree with me that this topic is highly loaded. We may need even a week or so to discuss all these aspects. And coming from the academic institution, I can promise anybody here that we are going to have, we are going to take from here and have a wider discussion from the academicians and across the players in the industry. Let me thank the keynote speakers, Professor Ulrich from London and Professor Esther Shingoma, also the panelists, Dr. Jujus from IMF Dar es Salaam joining us online, Dr. Habil Olaka, Dr. Musa Masoud, and Mr. Godfrey Nchangila, and everybody in the room, please let's clap our hands together as I announce this session closely or continuing in other networking discussions.
And we clap for them. Let's also clap for our moderator, Dr. Tobias. May I request you to please stand up and take 2 steps at the front and take a group picture, my photographers. As they take a group picture, quick announcement, may I request all the VIPs, as you walk out, you will use this door when we go for tea. Unfortunately, we've got to cut short on tea break. We have a participant who is a keynote from Palestine, and his time is limited. We're supposed to be at 11, so we've requested at least another 15 minutes. May I also request magavana na magavana, deputy governors wastaafu, speakers, moderators na keynote, wajana wote na waleo, wenye viti wa kamati za kudumu za bunge, PIC pamoja na budget. Naomba ukitoka tu kwenye huu mlango on the far left, kuna chumba pale, tunaomba tupite pale kwa ajili ya logistics, na tutaongozana na VIPs wengine ambapo huko tutaelekeza sehemu ya kwenda kunywa chai. Kwa sisi wengine wote naomba tuende Lake Nyasa kwa ajili ya chai, and please let's reconvene at the earliest possible. Saa 4:15, saa 5:15 naomba tuwe tumekwisha keti ukumbini tayari kwa kupata presentation. Nawashukuru sana, nawatakia wote wakati mwema. Asante. Speakers, moderators, keynote speakers from yesterday, today, and today. Governors, deputy governors retired. Wenye viti wa kamati za kudumu za bunge, PIC and budget. Pamoja na manaibu wenye viti wa kamati za kudumu za bunge. Tunaomba tupitie mlango ule. The VIPs, let's use that door as we break for tea. Interest of time, naomba ukiinuka, please start moving. As you get up, let's start moving. Time is of great essence. Safi kabisa. Shukuru. Let's move, people.
Can you please move? Can you please make a move? Any direction, but please let's move. Any direction, but please let's move. Naomba governors na deputy governors wastaafu, naomba speakers, moderators, keynote, moderators and panelists. Naomba tupite huku. Wenye viti wa kamati za kudumu, PIC na budget. Naomba let's move. To any direction, but please let's move. Naomba tutembee, naomba twende. Muda sio rafiki siku ya leo. Being the last day. Naomba twende. DJ, naomba yale matangazo yale. Technical team, naomba zile video za matangazo.
our customers were able to send money to customers of other digital financial services providers through the use of tokens and secret codes. This required multiple integrations between our various platforms and our various ecosystems, creating an administrative burden of reconciliation, flow management, and also capital to fund these floats. The coming of TIP improving all of these by one, improving the customer experience, because customers now receive value in the wallet in any ecosystem, but also it created one
You're looking for someone. Yes. So the deputy governor is supposed to deliver the closing remark. Okay. Deputy governor Someshenuka. Yes.
We don't have time.
We don't, yeah.
And there's no way we can cover everything.
That's a speech for him. Okay.
So let me try to deliver this to him.
So, all the best.
Good.
Hii namba yake si unayo? Nini mfano bosi?
Tulisema wanapitia mlango huu wanaelekezwa. Wanaenda secretariat room ni wale tu wanaenda kuchukua nini. Nasikia eti maneno wote wameenda kutumia ile chai ya kule sasa ya huku imebaki. Kabakia profesa peke yake anakunywa chai peke yake anauza yake.
Kwani kule umeingia wangapi kwa sana? Wameingia meza kuu mbona wote bosi?
Wameingia.
Meza kuu tu ndo wameingia hapa.
Tuliwaambia kama kwa sio badilisha na Pamela na wakati nikakwambia kabisa tulimwambia mpaka hostel. Baba watatumia ila mlango ndo atokee huu ili kusilete promotion kama jana. Yaani mpaka tunaonekana visho hiyo.
Hili badilisha sana. Ambadilisha saa ngapi? Si ndio tulipokuwa tumeambia nusu? Alibadilisha.
Ameambia na Ashe. Kwa mimi pale nikaa kushana na Ashe. Sio shida. Hata bonge kunywa huko sio.
Kwani si choni ipo au? I say nimesimamiwa hapa na bosi wangu ndugu yangu. Mdogo wako ni yule mkaka yuko slow. Naomba basi mwarakishe ndugu yangu. Unajua ni makundi yako. Sio kampuni. Kwani? Walibadilisha tangazo. Baba profesa mzee yule. Good morning, dear. Very well, thank you. Karibu. Happy. Oh, sorry. Is it on? Anauliza, is it possible to get the
Yeah, tutazikupa.
Can you take a photo?
Bro, nitakucheki samani, nitakucheki.
Wanazipataje? Wanazipataje? Umechukua contact au is she going to get them?
Tutaweka nani kule kwenye port.
Kwenye
kwenye port ya kofia.
Yule anapiga tayari. Konina.
Simu za kiganjani pamoja na mabenki na malipo haya ni zaidi ya shilingi za Tanzania trilioni 23 zilipitishwa kupitia mifumo hiyo ya malipo. Inaonyesha kuwa Tanzania tuna kulipa bidhaa na huduma kwa njia ya kidijitali. Tanzania inalenga kuhakikisha kila Mtanzania anaweza kutuma fedha na kufanya malipo kwa urahisi, haraka na popote. Machi 2024, Benki Kuu ya Tanzania inazindua rasmi mfumo wa malipo wa papo kwa papo ujulikanao kama Tanzania Instant Payment System TIPS. Tanzania Instant Payment System TIPS ni mfumo jumuishi unaowezesha mwingiliano na malipo ya papo kwa papo kati ya watoa huduma za kifedha nchini, mfano mabenki, kampuni za simu na watoa huduma wengine. Mfumo wa TIPS umeongeza ufanisi katika kufanya miamala mbalimbali ya kifedha, ikiwemo kupunguza gharama za uendeshaji kwa watoa huduma, kurahisisha usuluhishaji wa miamala kwa watoa huduma na kuongeza huduma nyingine za malipo ukiachilia huduma ya kutuma fedha. Kama Mtanzania unayefanya shughuli za kiuchumi, TIPS inarahisisha kutuma fedha, kurejesha miamala iliyokosewa, kufanya malipo papo kwa papo, kubaini na kuripoti utapeli, kuhakikisha taarifa za walipwaji ili kupunguza makosa, kufanya na kupokea malipo kwa kutumia jina mbadala lililosajiliwa. Hivyo, unatuma pesa kwa marafiki na familia, unafanya malipo ya huduma au bidhaa mbalimbali, unafanya malipo ya serikali au unatuma pesa kwenda mtandao mwingine au benki nyingine. TIPS inafanya kila muamala wako uwe wa haraka na salama. Benki Kuu ya Tanzania inafurahi kukuletea mfumo wa TIPS ili kukusaidia wewe na biashara yako kufanya miamala kwa uhakika zaidi.
Hata hivyo, ni vyema sasa Benki Kuu ikaelekeza nguvu katika kuhamasisha matumizi kwa njia za kimtandao ili kupunguza matumizi ya fedha taslimu. Na katika hilo, Benki Kuu kwa kushirikiana na Wizara ya Fedha hamna budi kukamilisha kwa haraka mfumo wa malipo ya papo kwa hapo ya Tanzania Instant Payment System.
Benki Kuu ya Tanzania kwa kutumia wataalamu wetu wa ndani imeweza kutengeneza mfumo ujulikanao kama Tanzania Instant Payment System, ambao ni mfumo wa malipo wa kidijitali wa papo kwa papo ambao umeweza kuunganisha
za huyo levels. Bora. Maana hapa nikishaingia
Andrew, testing. Andrew, testing.
More.
Testing, testing. One, two. Testing.
Mbona tusikie? Oh.
Testing 1 2. Testing 1 2.
I don't know whether you can hear me. I have been online.
Yes, we can hear you. Can you hear? Can you hear us as well?
I hear you very clearly.
Thank you.
So I have been online since 11 your time, but I understand it has been delayed. So hope we start at. I have been suggested to start at 11:30, so just 11 minutes from now.
It's good to hear from you, Mr. Kadir. My name is Beatrice. I'm the MC for the session.
Hi, Beatrice.
Hi, Mr. Kadir. We have about 10 minutes to start the session, and we'll let you know when we are ready.
So my session starts in 10 minutes?
Yes, sir.
Okay, so I mute and I'm going to keep my camera off. I will turn it on when session starts.
Thank you so much.
Thank you.
Ninaomba ushers mtusaidie kukaribisha watu ukumbini. Tunakaribia kuanza session yetu. Ushers wote mtusaidie kurudisha watu ukumbini. Asanteni. Saba aanze kupasha saba na nusu.
Shiriki vyema watu ujenzi na tena vituma hata kwenye unaweza wakushona unaweza wanao unaweza mtikungo unaweza udakitari baba wasikari tunawa ujasiri silaha yetu kujituma ndo sana umoja ndo nguvu yetu.
Welcome back. Naomba tufanye zoezi moja dogo. Naomba tufanye zoezi moja dogo. Can we all come back? Naomba tuingie. No, you will be focused. I'm doing some music first before we start the session. Thank you. All right. Naomba wote tuende kwenye viti vyetu. Nataka tufanye zoezi moja fupi. Can you please take our seat? How are you?
I'm a superwoman. I'm a superwoman. Yes,
So please take your seat. Take your seat. I want us to do one quick exercise and then we proceed with the final session for the day. Naomba mniazime masikio yenu popote mlipo. Kindly take your seats. Naomba turudi kwenye sehemu zetu. I want to do one quick exercise before we go on to the next and final panel for 2024. Asante sana. Sasa kwa heshima ya wanawake wote ambao wako in this room today, can all the women please put your hands together? Thank you so much. I'm happy to see that others also clapped. This is a good sign that you're following up. Can all the men in the room please put your hands together for all the women in the room? Excellent. Sasa naomba wote tusimame. Naomba wote tusimame. Can we all please stand up? Can we all please stand up? Kuna watu bado wameketi, so I can't proceed. Naomba okay, wote tumekwisha simama. There's no better way to honor a woman and appreciate a woman than just to tell them we appreciate you, right?
Big Four. Of course, there's so many other factors, so many reasons. They will be covered later, but maybe they'll be asked questions, and that's what we should really look forward. And the last point that I just wanted to mention, are kind of looking at 5 main areas that I've picked in terms of technological innovations that are really happening right now. One, we've had it's enhancing efficiency. in terms of delivery of services. We saw tips being launched just the other day, yesterday, and I think we'll get opportunity to also question here and discuss a little bit of tips. We have the director of a payment system in Tanzania who worked tirelessly together with the team and the previous leadership and the bank to put efficiency. But again, efficiency also from the industry. Secondly, it's intelligence, enhancement of intelligence, the ability to be able to quickly analyze, understand your customers, understand your market segmentations, understand product designs and the like. The third, increasingly interconnectedness and interdependencies, not only domestically but across the world. With technology, anything happens in Tanzania, it can happen anywhere, be it a WhatsApp payment, a WhatsApp bank, digital banking, it's across the world. The fourth is data generation, an enhancement of data. The capability of the world now to generate, produce, store data has just skyrocketed. It's out of the roof. And that, of course, as most people say, and that's a fact, data is the new oil. And I won't talk so much about, but there's so many issues there. Data mobility, data ownership, cloud, data management, where should data sit, how is my data used, and how do you use data for artificial intelligence, and even understanding the culture of a population or a segment of population. The last one is emerging technological innovations. And this one mentioned the AI, the Internet of Things, the use of softwares, which emerging softwares like blockchain and the like, and cryptos, and all those that underlying through the emerging technology software that I've just mentioned. And of course, the biggest of all that's really going to increase the speed of computers that we all know is the quantum algorithms, quantum computing. And the future is just so bright, and the future is happening very, very quickly. So having said those ones, there's a flip side to this, and the flip side to this, which I know the team will discuss, is the risk management pressure that all this technology is building up as we see. And two things that we really need to look at. Number one is to have that mindset of the parachute mindset. So there's this saying that the optimist invented the plane, but the pessimist invented the parachute, right? So we all need a parachute, looking at it from a good perspective. So that's risk management. Now, one thing that I'll just mention, not to mention consumer risk, cybersecurity risk and the like, but we saw recently social media causing some bank runs. CBMV and the loss of shares of almost 12% shares of Credit Suisse was lost in one day, just because some journalists wrote in a tweet that this major investment bank is on the hinge. And that was retweeted by the investment.com. It went multiple times, became viral, and the losses went down to 12. Of course, Credit Suisse had from 2019, it had problems, and it compounded to that particular incident. But quite interesting is SBMV. Now, in SBMV, the Silicon Valley Bank, we know that 40 billion, which is 1/5 of the value of the deposit of CNB, were lost in 2 hours. So what really made that possible? Number one, social media. Tweeting along the society. But secondly, the ease and ability to use your digital payments to withdraw. Right? So you see the flip side of the benefit of technology. Now, what does that mean? And I'll end with that. It means now regulators and service providers need to embed new technologies, AIs, internet scrapping, to understand and be a hedge of what's really happening in social media. Because a rumor monger and a rumor peddler can actually cause a bank sprint, not a bank run, because it's quite very fast and things can change quickly. With that, ladies and gentlemen, I'm now going to introduce you a very distinguished and able panelist that I'm honored and humbled to call upon the floor. I have one panelist who's a very experienced practitioner, Mr. Mr. Kamal Quida, Chief Executive Officer of Big Catch Bangladesh, is online. He will be coming in. But again, if you don't mind, Mr. Kamal, today is Women's Day, International Women's Day, and I know you've been with us for some time, went through. If you don't mind, and I know you don't mind, you're a gentleman, and therefore we ask Professor Olainka Davis-West. She's a professor of information technology from and an associate dean from the Lagos Business School, Pan-African Pan-Atlantic University from Nigeria, to do a keynote for 20 minutes, and then you will also be allowed to move for Mr. Kamal. Thank you for your indulgence for the same. Ladies and gentlemen, put your hands together for Professor Olenika. Thank you. Welcome, Professor.
Good morning. Does it work? Can I have my slides up, please, IT team? Good morning. Good morning, ladies and gentlemen. Greetings from Nigeria. So I think in the spirit of being here and being glad to be here, I think I want you all to adopt me as your Nigerian sister. So can the ayes have it? Thank you very much. Great. Thank you very much. And it's great to be here this morning to talk to you about technological innovations in financial services. And I'm going to do this in 3 sections. First of all, there are 2 big words that we need to talk about. Can I have the next slide, please? I don't have a clicker here. Great. Okay, so we're going to do this just setting the context and having a background, and then we'll talk about technological innovations and the whole 4IR and emerging technologies. And then I'll also bring you into technological innovations, but looking at what's going on in the world, and then also just grabbing some use cases which will resonate because they've been coming up in conversations for the last 2 days. And then I'll conclude with certain recommendations or proposals as to what we need to do to ensure that we can sustain this global revolution. Thank you. Next slide, please. Next slide. Thank you. So when I think about resilience, and there are 2 big words we're thinking about today, right? It's resilience and innovation. For me, first, I look at the Sphinx. I was in Egypt late last year, and I went to the Giza. And this is a statue that has stood for more than 4,000 years. And I think when I think about resilience, that's what I want us to think about. But more or less, the World Bank will define resilience as basically ability to withstand, adapt, and recover to shocks and stresses. Withstand, adapt, and recover to shocks and stresses. And we've seen a global world of issues. We mentioned the 2008 financial crisis. We've mentioned COVID. And so we're still recovering. Right? So we're not out of the woods yet. So when we're thinking about resilience, it's really about how do we begin to build that stability and build the stones, the limestone that would withstand years and years of weather, climate, and any other shocks that are coming our way. Because you know what? We don't know tomorrow. So we all have to be prepared today with what we know, thinking about how are we going to better prepare ourselves. Then the next thing we need to think about is innovation. Next slide, please. And when I think about innovation, for me, from a digital perspective, it's 2 things. Creativity. What can we do with the mind? And when we think about digital innovations, it's really about we're developing new technologies, and we see a lot of that with the big techs in America and China building out and coming up with new innovations. But then again, we're also applying existing technologies innovatively and creating innovative ways to use new technologies. And the 2 are creative applications. So when we think about M-Pesa and mobile money, it was a creative application because what they did was taking a mobile phone and taking financial services and a store of value and putting it all in one box and saying, you can do this. Right? And so we need to continue thinking that innovation is not just about sitting in a lab and bringing out something new, but it's the incremental innovation that will continue to move us to the promised land. Next slide, please. Next slide, please. So let's talk about some of these emerging technologies. And when we think about the 4th industrial revolution, we talk about the world is the 4IR, we've missed the industrial revolution. But I think that in sub-Saharan Africa, we're scratching between the 3rd and the 4th. Or maybe sometimes the 2nd and the 3rd. When the power went out, I laughed because for us in Nigeria, that's just a norm. We don't break into a sweat, right? So, but when you think about it, what are we talking about when we talk about the 4th industrial revolution? It's really about hyperconnectivity. hyperconnectedness. And when you look at it, it's happening in three realms. It's happening in the physical realm. We look at the autonomous vehicles, the self-driving cars. It's happening in the biological realm when you think about digital gene editing and cloning and things like that. But it's also happening in the digital realm. And in the digital realm, we're seeing a lot more of information flows that are going back and forth. So next slide, please. And when we look at this, I follow technologies. This is what I do for a living. So every year I advance and update this chart. And there's many technologies that we need to be looking at. And unfortunately, you're not all technology people. And then that's also part of the challenge. We bring these new glitzy modern toys and we say, oh, MD, we need this, we need that, right? But then again, all you're asking is, what's it going to do for me? What problem is it going to solve? But then again, when we look at, for example, social media, cloud, and mobile, or we call it SOCOMO, right? This phone is more powerful than what put a man on the moon in the 1960s. But yet we're carrying it in our pockets. So how can we exploit those? And we have different technologies. We have Web 3.0, which means that I own my own data even on the internet. So the internet is decentralized. We have Internet of Things. We're all wearing wearables one way or the other. But these things are tracking us every minute of the day. We have augmented reality. We have virtual reality. We have the metaverse. There's some businesses in India now that are creating financial institutions on the metaverse. So you don't need a branch. You don't need a website, but you need this metaverse experience. We have open data and open source. So that means that I can get bits and pieces and use and plug into my own. We have 5G. We have, the internet was one of the first global networks that we were using. And after the internet, we now said, okay, we need faster, we need better, we need more throughput and more reliability. So the G's kept on going up. And now we're at 5G. And what does 5G mean? It's hyperconnectedness, right? You're always on, you're always involved, and you're always there. But on the right, I have put 3 technologies on the right because they're also transformational to Africa, enabling Africa the ability to leapfrog. First is artificial intelligence. And yes, we can talk about artificial intelligence, about robots coming to take our jobs and machines coming to do our jobs. But I would like us to think about it as augmented intelligence. Because whether we like it or not, the robots can do the crunching, but the judgment still remains with the human. And so that judgment, we now have to continue owning it, but then owning the fact that we can be assisted. And Kennedy mentioned efficiency. You want everybody to do things better, faster, quicker, right? And one of the mantras of self-driving cars is that they don't sleep, they don't text, right? And they're just continually doing the work. Data is another thing that we need to think about. Data is the new oil, as they say, and I think somebody mentioned that data is one of our biggest assets, but because it's intangible, we don't really value it, we don't see it. But then there's data around us everywhere. And what do we do with what we know is really the way we need to think about data. Are we analyzing it? Are we driving insights from this data to enable us make better decisions? And then finally, distributed ledger technologies, or the chain of blocks, or blockchain, right? And again, unfortunately, we know blockchain for nefarious activity with crypto. But then again, blockchain has immense possibilities and use cases that we can use to drive and reduce the cost of delivery of services. For example, it's cheaper to transfer money on a blockchain than it is to transfer through traditional networks. And those are some of the things that we need to think about. It's not about either or, but how do we use these things safely to ensure that we can bring services to all? Next slide, please. In the case of financial services, one of the things we've been hearing over the last decade is, the customer experience, right? We're driving a customer experience. We're driving a user experience. And this experience matters. And when we think about this experience, we really have to think about it from the perspective of when we're thinking about creating products, when we're thinking about delivering products, and then when we're thinking about servicing our customers thereafter. And from that value chain, you find out that there's technology in everything that we're doing. So this customer experience, this need for better services has also been what has invigorated the fintechs and a whole new world of technology services. That's why we now have in every sector, agricultural technology, ag tech, health tech, clean tech, etc. Because what they're telling us is legacy businesses, you were not thinking about the customers, You were just thinking and doing your own thing, hoping that the customers will meet you. But again, with data, customer trends are changing and evolving. And how are we as businesses evolving and changing to meet those trends? One of the panelists spoke yesterday about business models. To what extent are we changing our business models? Because what some of these fintechs, all they're doing is bringing new business models to the game. And all of a sudden, ooh, it's a shiny modern product that we were not able to do. Next slide, please. And when we think about all these things, this is an IMF chart about what fintech is like or what fintech looks like. And basically all they're saying is that there are 5 simple propositions in financial services. You want to pay, you want to move money, right? You want to save money, keep money, you want to borrow money, you want to manage your risk, or you want to get advice. And when you think about these 5 key propositions, what they're saying is that there's a traditional model, but there's still gaps. And we're talking about these gaps in terms of literacy, transparency, etc. And then there's the different technological solutions, and then we're bringing out new technological innovations and solutions. And what this means is fintech really, there's an acronym called CLASSIC that we use to describe fintech. And the C stands for customer-centered, because they're always thinking about the customer. The L is legacy-free, asset-light, scalable, simple, innovative, and compliance-light. And that's really what they're doing and churning out some of these new ideas and new solutions. Next slide, please. So when we think about all these things, okay, so what? And I think it's always nice to take a step back and say, yes, so we have all these new technologies. And don't forget that what we're here to talk about is how do we use innovation to catalyze resilience? Because we can have all the innovations in the world, and again, one thing that we also need to remember, it's a double-edged sword. As I'm driving efficiency, I'm also driving risk. Because again, I'm introducing new risks into my model and into my system that maybe I don't even have the capacity for. So when we think about catalyzing resilience, I think there's 5 things I want, or 5 use cases I want us to think about. First of all, are we deploying digital products and ultimately transforming into digital businesses? Because I don't think we're banks anymore. I think we're digital businesses that are offering banking services. Because everything we're doing is digital. Correct me if I'm wrong. You know, the room has gone very silent now and I'm worried. Huh? People want to run out of the room and say, I need to find another job. No, we all need to be digital natives, that's all. Another thing we need to do is reduce information asymmetries and improve productivity and efficiency through prompt and evidence-based decisions. A lot of us make decisions based on my gut or based on what I did last year. But then again, the context and the terrain keeps changing, right? Social media is there. A tweet is 160 characters. So you can imagine what 160 characters can do. When Kennedy mentioned the Credit Suisse issue, 160 characters. The next thing we need to do is about how do we cooperate, co-compete, and collaborate. And being connected and continually building linkages, because no man is an island anymore. The next thing is how do we ensure that we're inclusive and we leave no man behind? And finally, how do we ensure that we keep the environment safe and sound and stable? So I'll go to the next slide and let's start talking about this. And these are going to be in 5 different sections: digital transformation, building information orientation, being connected and always on, and the shadow economy, as well as talking about financial crimes. And all these things have been mentioned in the last 2 days. And again, there was no scripting or passing on as to what's going to happen. Next slide, please. And the next one now. So let's start with digital transformation. You know, I think there was a cartoon I saw that, you know, who drove your digital transformation, the CEO, the CIO, or COVID-19? And guess what the answer was? COVID-19. Because a lot of us, since the turn of the millennium, the next slide, have been sort of reticent about implementing technology. It's not safe, it's not this, we don't know about it. But then COVID happened and we all had to jump. So the next thing about it is that can we jump by design rather than being jumped into compulsion, right? And what does that mean? Digital transformation means a lot more than just bringing in technology. It means looking at our entire business and redesigning our entire business around the new technological systems. It means changing our job descriptions and our roles. It means changing sometimes the structures that we have in our organizations. So there's more to digital transformation, and it's really about evolving us towards a digital business or a digital first business in that sense. The second, next slide, is about data, information orientation. And I have two sides here. On the right side, we know that this ability to get information has given us the ability to provide digital financial services, right? And we can move money, information flows, financial flows digitally. But on the left-hand side, it's really about information orientation or data orientation. One of the big challenges is a lot of us are not very used to making decisions using data. Either we don't have the right data in front of us, or we just want to use our normal sources. But then again, the world is moving towards being more data oriented, or as they call it, data-vorous organizations, right? And how do we think about it? Even from the supervision perspective, there's a school of thought that says, we've gone from rule-based to principle-based to data-oriented supervision, because the bottom line is, when the previous panel was speaking, we don't need to wait for bank examinations if we have it right, right? We can use technology and AI to predict what's going to happen. Because again, we've trained the data, we've trained the system to say this is what has happened before, so it can give us early warning systems so we're not caught unawares. And that's the way supervision can work. But it doesn't mean you still won't go into the bank if you want to, but there's different ways to use the data to make the right decision. So when you go in, you can actually be very focused and very, very laser focused on what you're looking for. The next slide, please. Yesterday we witnessed the launch of the TIPS, which is all about interoperability. In other words, I can move money between different networks, assumedly. But then this is all about connectedness, and we began to like connectedness with the internet. But connectedness also has two challenges. In Nigeria, I said that, I tell my bankers that the thief is no longer coming through the door, because we put in dead man doors and expect everybody to go through these dead man doors. But the smart thief is already in through the cables. So while we're connecting, we also need to think about how do we build our human firewalls, because it's no longer about system firewalls. It's also human firewalls, because we are also a risk. We get malware, we bring in ransomware into the organization system. So connectedness is also something we need to think about. And if you imagine, maybe 10 years ago, we would never have imagined that people would be connecting by Zoom, right? We would have said everybody aggregate physically, but it's allowed us so much more possibilities in the world we look at. And it's also allowed us to reach customers in rural locations and different locations. Next slide, please. Now, this issue about illicit transactions is something, or a shadow economy, something that we need to continually think about. But again, using technology, how do we ensure that we leave no man behind? How do we ensure that using digital IDs, we can also meet the standard setting bodies regulations, so we're not also running foul of the law? Because interconnectedness means we're all related. What's my life got to do with the subprime crisis in America? But then again, it affected everybody. So we can't run away from the fact that financial systems are global, and we need to ensure that there is sanity and sanctity within those systems. So we have technologies like, I'm done, don't worry. We have technologies like blockchain and cryptocurrencies that assume or give you some anonymity and privacy. But then again, for us, it's also scary, because again, that means traceability becomes a problem. But I think that it's about understanding how to leverage these technologies rather than not allowing them to work in the certain environments that we want them to. Next slide, please. And one of the things I've been doing is following the global Findex rankings for the last 8 years or 12 years since they've been run. Next slide, just continue pressing. And as you can see, the top is the internet banking applications, the bottom is mobile money accounts. And as you can see, since 2011, there's been a progression in terms of mobile money is bringing on more people into the system, because again, it's not that the requirements are different, but it's just a bit lighter on the people. So when we think about choice architecture from a behavioral perspective, it's really about helping people make easy decisions rather than making things easier for them to access, not putting loopholes and hurdles so they can't access it easily. The next slide, please. Financial crimes we've talked about in terms of how do we ensure that we're putting in the right structures and systems to secure the way we store data, the way we transmit data, and then the way we transact with data. Because one thing we need to be mindful of is that even if you stored it, when you're transmitting it, it can be intercepted and manipulated at that point. And that's where we have blockchains and anonymous systems and distributed and centralized. But again, I think it's also about how do we use technology and artificial intelligence to understand fraud? Because you see, the fraudsters are in our systems already. And it's about identifying trends and patterns. Someone spoke about the Hawala earlier on, right? What are the trends and patterns? And then this is where technology can help, because a human can't really look at that those vast amounts of data. Thank you. Next slide, please. So I am concluding now, Kennedy. So in conclusion, ladies and gentlemen, I think for me there's 5 things we need to think about or do better. And this is really about, first of all, we need to become people-centered, or customer-centered, or customer-focused. Then we also need to continue making continuous investments in digital innovations. We need digital, strategic, visionary leadership. We also need the talent pools, and this is not just talent pools from the technology side, it's all of us. Because whether we like it or not, we are also going to have to interact with these technologies. And so it's all of us. How do we unlearn, relearn new tools, new techniques around doing our work? You know, last night I was on a class on prompt engineering in artificial intelligence, right? Because these things are important. We all need to know them. But then again, we have to take the time out to learn. And then we also need evidence-based policies. But in the middle of all this, I think, is research and context. Because we're not going to cut and paste, because the trends and environments in different societies differ. So thank you, ladies and gentlemen. Asante sana.
Thank you very much, Professor David West. And please join the stage. And now, ladies and gentlemen, before we are going to invite the other panelists, I would like to call upon our online speaker from Bangladesh, Bikash. Over to you, Mr. Kamal. Mr. Kamal?
Yes, sir.
Yes, you have 15 minutes. You're welcome.
Also, it's nice of all of you to invite me. And Tanzania is someplace very close to my heart. I visited there first 2005 on my way to climb the Kilimanjaro mountain. Since then, I visited the place many times and learned a lot from your neighboring country, Kenya. So I think it's very important, Kenneth, I say a little about what I do, because that gives the perspective of my view and my thoughts.
Sure, you can. Please go ahead, Kamal.
So I'm a practitioner. I start a business with a bird's eye view, but I operate with worm's eye view, because I'm in the ground and I deal with ground reality. So I founded a company called Bikash, which has now 75 million verified registered customer. And it's a tightly run ship. Out of 75 million, we have 32 million MAU, so monthly active users. So, and we do around 13.5 million transactions per day. So what I started as with a $5 million seed capital in 2008. In the latest round, we had to raise $250 million 2 years ago. So the reason I'm sharing this thing with you is just to give you a perspective, so you understand the scale. The total velocity of our platform last year has been $96 billion worth of Bangladeshi taka. So it has transformed the way common people do small businesses or small activities. It started from a very simple research. And the research was that poor people, when they go to a bank to transact, or poor people or rich people, doesn't really matter. When people go to conventional banks, it costs $1.28 for the bank to offer the service, the footfall cost of the bank. But when it comes to poor people, their transaction ticket size is usually less than $10. So when the customer's footfall cost for the bank is $1.28 and the transaction size is $10, there is no way the conventional bank can provide service to poor people. So how do you bring poor people into formal financial service? That was a challenge back in 2008 I was struggling with. And that gave the genesis of creating bKash. And after almost 14 years today, 16 years, I would say, 16 years, I gave you the number, and bKash has 6 shareholders, the largest developing agency in the world, BRAC, which is also very much active in Africa. BRAC has a bank, BRAC Bank, regulated by Central Bank in Bangladesh. So BRAC Bank is a shareholder. Money in Motion, a company I founded in the US that provided the risk capital, they are a shareholder. Bill and Melinda Gates Foundation is a shareholder. International Finance Corporation is also part of our cap table. Alipay of Alibaba affiliates. And finally, SoftBank, they became a shareholder. So all these forces were brought together to create this transformative solution. But how it contributes to the resilience of an economy which is emerging, that's what I want to talk about. So the first thing to talk is the way fintech happens in countries like Bangladesh, Tanzania, Kenya, this kind of emerging economies, is that if you create a solution which is totally state of the art, they're not relevant to us. They became a theoretical solution, and they became a solution which is a replica of Silicon Valley. That doesn't solve our problem. So if PayPal is brought to Kenya or Tanzania, it's not going to work. Kenya and Tanzania and Bangladesh, we require agent network, where the customer can top up their wallets. Now that creates a group of economic forces, and those forces are also part of solving the problem. So then your economic risk gets spread across the society and the country. So any shock, kind of shock that global financial crisis people saw in 2008, those kind of shock really doesn't impact for a service like us. Kenneth, you were mentioning about Silicon Valley's crisis, social media crisis. But just think about how many crises Kenya had in last 15 years that M-Pesa is live. Many of these crises are ground shaking, but it did not really overnight made M-Pesa disappear, because it is actually, there are small pieces, small individuals are involved into this ecology, and that's makes it so resilient. So one beauty of fintech for countries like ours is that it creates a very resilient solution. I'm going to give two other example of this resilience behavior. So one, I just said how you create an ecology, agent network, distribution. And the next thing is payment. So instead of sending money home, you want the digital money to be used for payment purposes. And when you do that, you also again bring lots of forces. Those are not subject of small shocks. And I'll give a tangible example first. See, when you look at the bond market, you'll always see the municipality bond are very stable. Municipality bond of a small city in the US. I do not know if Arusha or Darussalam have municipality bonds. But in the US, municipality bonds are very common. Small towns, small cities, big cities, they all offer municipality bond. Now these bonds are structured in a way that whether the economy is doing well or not, whether COVID-19 takes place or not, people pay their utility bills. People pay for their water bills. People pay for their road cleaning bills. And as a result, the municipality earns their revenues. So these bonds are also extremely shock-proof. So countries like us, when we offer payment, we are the acquirer of large number of small shops, mom and pop shops, to organized grocery stores. So they also create an ecology, whether you will face a big impact or not. Those basic things, those grocery buying some apple and buying some flour and buying some rice, buying some chicken, those will continue. So like the municipality bond, payment infrastructure is also very shock-proof. And that, again, that contributes in the resilience of a society. And as you asked me to speak on the impact of technology and innovation in creating financial resilience, these two examples I can give is very relevant and very real. And the third one I want to talk about is a bit hypothetical.
That will be the last part for now.
Sorry?
That will be your last point for now because of time.
Kenneth?
Yeah,
Kenneth?
Please
I don't want to
continue.
sound rude. I don't want to sound rude. Please. You have made me 40 minutes late, and then I started this session. So allow me to speak with my flow. If you want me to stop, I'll stop right now. But I'm also attending from far away, so you need to allow me to speak.
Please
if
continue.
it's an issue for you, then I can stop right now.
Now continue on the third point. Thank you.
Thank you. Thank you. So the other point I want to make, if you come to see from my little experience in Tanzania, that Tanzania, the way the Serengeti plain is created is from the volcanic ash, and the volcanic ash creates fertile soil, and that allows the animal to come, and it creates a fantastic ecology. Financial inclusion is also something like that. Is that it's a society, it's an ecology where every individual participates. And when every individual participates, that creates a kind of force that's by default is very resilient. Okay? So in the case of say, I'll give an example of bKash, and maybe similar thing applies to M-Pesa as well, that everybody participates through a small store value account. And that store value accounts, when you have participation of 75 million people, it creates a massive pool account. Now, it's very common that in middle class and upper middle class or rich people, they will participate, they will make a saving, and through the saving, a pool will be created, and industry would be financed based on those capital pool. But now technology is allowing very poor people, in Kusumo, a very poor people in Dar es Salaam, or very poor people in the slums of Nairobi, are also participating in the capital pool creation. And that capital pool then bank is maintained in a trust cum settlement account. And that capital is then used for social and economic development. So again, it's a very good example how Kenya has capitalized it, Tanzania is doing, and certainly Bangladesh is doing it, that technology is allowing millions and millions of poor people and common people, rich and poor, irrelevant, are participating in the economy. And that makes the economy even further more resilient. So with that note, I'm going to stop. If you have any question, I'm happy to answer that. Thank you very much.
Thank you very much, Mr. Kamau. We're really privileged to have you with us, and thank you for your patience with us, and we'll be having some follow-up questions from the floor. Now, ladies and gentlemen, I would also like to invite to the stage the following distinguished panelist, Mr. Epimac Mbeteni. He's the e-commerce director of Vodacom. Please put your hands together for Epimac. And we have Mr. Faraz Hamad. He's the chief executive officer of Azim Pay. A round of applause for Mr. Faraz. Thank you. We also have Dr. John Sausi, director of Financial Information Systems and IT Services from the Ministry of Finance. Thank you for Mr. Dr. Sausi. And last but not the least, Engineer Benedict Ndomba, Chief Executive Officer of E-Government Agency. A round of applause for him. Thank you. Thank you so much for joining us this morning. A few questions that I'm going to ask each of the panelists, but again, we'll also come back to Mr. Kamal, who has been patient all this while. And I'll start with Mr. Faraz. You're leading one of the emerging fintech players in the market, and you've come in at a time which is right and ripe. So there are several financial services technologies that do emerge in this market, and startups are facing several challenges. So how would you speak to upscaling and adoption of use by the population? We've heard from the two notes, from Mr. Kamal and also from Dr. Professor David West. With your own experience and how this market is potential to expand, are there any challenges startups that are facing, and what you should do to adopt use cases in Tanzania? Welcome, Mr. Faraz. Yeah, and we'll just do a round of 5 minutes, 5 minutes. We've been given some time, so let's do 5 minutes each, and then we get several follow-up questions. Let me give you this mic. Thank you.
Hello. First of all, thank you very much to the Bank of Tanzania for the invitation and the honor to be joining this panel. This is a bit of also, I wanted to mention, happy to be on the panel with my friend Kamal. Actually, I spent in a previous life some time in Bangladesh and was actually around when he was conceiving the idea of bKash. So it's a full circle moment for me to be here with him on this panel. couple points I want to make in terms of solving problems. FinTech has a capacity to play a big role in scaling solutions to existing market problems. So one I would like to draw attention to is something that we're doing in the market called Sarafu. Sarafu is a B2B e-commerce application where manji shops, duka shops can purchase from manufacturers. We all know in Tanzania there's been a massive sugar shortage over the last 2 months. And this has created a spike in the price of sugar in the market, sometimes triple, even quadruple what the standard price is. So this is obviously very difficult for many of the small traders in the market. So one solution that Sarafu can provide to the traders in the market is we can actually control the price of sugar in the market through the application. So in other words, because Sarafu is a fully digital platform and because we incorporate mobile payments, like the ones that Kamal was referring to, we can ensure that the price at which the trader buys the sugar is the price at which the indicative price at which the government has required them to buy the sugar. And that happens, in fact, because Sarafu does not allow cash on delivery. It does not allow payment to a driver. So as a result, when a customer purchases a bag of sugar on our platform, he receives that exact bag of sugar at the price at which he purchases it. That doesn't happen anywhere else in Tanzania right now. So if he goes to an informal market or an informal trader, he might purchase on the phone that bag of sugar, but when it shows up in his shop, the driver may say, "I'm sorry, sir, there's a surcharge." Or it could be that someone, other middleman comes in the way and increases the price. And this is impossible for any regulator, any market kind of oversight to manage, because all these payments are happening in cash. So by integrating the digital payment with the e-commerce platform, what we've done is created an ability for a manufacturer to sell at a price, an indicative price at which they want to in a market which would otherwise be relentlessly manipulated by informal forces. So these are the forces that you cannot see. So what we've done with Sarafu is created a transparency around the pricing in the market to ensure that when trading happens, it happens in accordance with the way that the manufacturers are attempting to address, and the way that the retailers can actually benefit from that and transparency in pricing. So ultimately what we're doing, and in terms of scale, in terms of how do you scale a system like this, what we're doing is we're facilitating trust in the market. And that trust facilitation is what will ultimately drive adoption. Because if the trader can now rely on Sarafu for that pricing, the inventory, and the reliability of delivery, then they can start to plan their purchases more effectively. And that is ultimately how you increase formalization in the market. Now, I'll make one last point before I hand over. We spoke yesterday about TIPS. TIPS being this enabling platform to allow all players to be able to transact at the same type of same pricing, same connection, lowering the barriers of connectivity for financial service providers. I do think that the Bank of Tanzania's foresight with respect to interoperability amongst financial service providers could very well propel Tanzania to become one of the largest, if not the largest, mobile money player in the world. I know actually Kamal presented some very dramatic numbers, and Bangladesh is certainly one of the leaders in the world. But I do think Tanzania can, and it's because of this barriers to entry around transaction processing that could enable that. And what that does, and this is, I'll end with this, is if you want to scale, you have to drive innovation, you have to drive adoption in the market, and you have to drive lower costs in the market. That's what you need to scale. Right now, it has been the case that in some ways mobile money has been a siloed business in the sense that people compete on access to the customer. How do you get access to the customer? Once I have access to a particular customer, I prevent others from getting access to that customer. Okay? That type of competition does not drive innovation. What it does is it actually disincentivize innovation, because what you're focusing on is capturing the customer in your system and not letting them leave. What we need to focus on is competition based on cooperating based on access, but competing based on value. When you compete on value, what you do is you drive down prices and you also push innovation, because then any customer can choose which service provider do they want, okay? And when they make that choice, it'll be based on a value-driven choice, not on an access-driven choice. So as a result, I think TIPS is really the future, and what it should enable is competition based on value, not based on access. We cooperate on access, we compete on value. And I think this is a key point that needs to be fully enabled through the TIPS platform, which means everyone should have equal access and everyone should compete on that value proposition that they can provide. So those are my 2 points, and I'm happy to come back on that.
Thank you very much for us. Thank you for that. Precisely, those 3 points are quite important, and we're going to get back to them. I'll now go to, let me just flip and move away from the market and just move to the regulator and go directly to Dr. Sausi. Dr. Sausi, you're coming from the Ministry of Finance. You've pioneered a lot of innovations that we also benefit from the private sector and also from other regulatory institutions. So from that perspective, how can you see an upscale of Tanzanian technological innovations and services delivered within the context of digital economy of Tanzania? So where do you see the country moving on in terms of potential for cash light or potential for new innovations that are probably being driven from the centralized perspective, but also from opening up the market to become a digital economy? Over to you, Dr. Sausi.
Thank you very much. When you look at the way we are going now, I think we are going on the right direction. The launch of TIPS now is changing almost everything that we are doing. I'll take an example of the way we currently operate in perspective of the government on the transaction that we make and the data that we are collecting. We had few challenges before, but with this launch and this innovation that are coming, we see that the government and the stakeholder, now they are connected. We have connected the number of services which were not previously connected. I'll give you an example. When we are doing payment to government services, especially when we have one customer who is banking with another bank and government is banking in a different perspective, that has been a challenge to us. But the launch of TIPS now, we can get everything instantly, meaning that the government now can realize the revenue. We can see now we are going in the different direction. When you look at the landscape in maybe the region, Tanzania, we have done a lot in terms of government and in terms of how we deliver our services. And the funny thing is, the private sector now, they have to catch up with what we have been doing in the government. With the recent innovation that we have been doing, we've been getting now challenge when we want to upscale or if we want to roll out our services. Most of the financial services provider, they are not ready for that. The recent maybe launch of government e-Mikopo, that has been very challenging to some of the service provider. For now, we have like maybe 3 or 4 who are ready for that. And now, when you look at what is the tech behind here, the government employees now they are not supposed to go to the bank and fill all those required forms. The technology has changed. Now we have introduced our KYC, the government KYC perspective. You can, as a government employee, you can just go in the portal that we have, just click a few buttons, then you can select your product. Now we are selecting the product. I can decide, I need an MD, I need a CRDB, I need an NBC, whoever has the rate that I'm looking for. Now I have seen now the mobile banking, mobile money now coming in Pesa, Tigo Pesa. Okay, can we have this facility? I'm saying, okay, hold on. because we have our regulation. Let's see how we can incorporate you. But that's the things that we are putting together. The next thing maybe for now is to look on the data. We are collecting a lot of data now. The data that the amount of data that we are collecting at the government and the financial institution now needs another landscape, because we have the data. How are we analyzing them? How are we profiling our clients? How do we use those information that we have? I'll give an example. I was one of the team when we are doing automating the gaming body systems. We were trying to do this we call getting all information. What we did is we had to have like every transaction that is being done in a slot machine, or everything that someone is betting. We are collecting that information. We managed to get the information to us. Now how are we going to use them? That has been a challenge now. Therefore, we need to see how we can use this information, how we can use the data that we have, how we can use the technology that is present at the time to make the right decision. The professor said we need to make decision based on the data. Therefore, that's what we see. Data, whoever had the data will be the king. As a government now we have the data, we have enough information. What we are doing now is how are we going to profile it? Thank you.
Thank you so much, Dr. Sausi, for the 3 main points, which the audience or I will also come back to them. And now let's go to EPIMAC. EPIMAC, you're also working very tirelessly from the private sector. I mean, I'm assuming you'll be talking also from a representative perspective, despite that the fact that you're an e-commerce director from Vodacom. So how can the new frontiers of technology be adopted in terms of enhancing delivery of financial services from the perspective of the market that you're coming from in terms of Tanzania, but also from the institution you're representing and the network of mobile payment providers? Welcome, EPIMAC.
Thank you so much, and thank you for the honor for inviting me. I think first I want to correct my title. It's M-Pesa Director and not e-commerce director. I think before I respond, I want to take us through the journey of where mobile money came from. And if you understand that, then you understand how can we unlock future use cases or future innovations. We're all at an age whereby we remember what it was to send money back home 15 years ago. I think convenience was a big thing. If you look 15 years ago, for you to be able to transfer money from one person to another, either use a bus, some are putting in envelopes and so forth. So when mobile money came, what it solved was really convenience and safety. And because it was a perceived also problem from the consumer side, that created adoption. And I like to use the word perceived because practically, as you practice business in marketing, for you to solve a problem and get adoption, it does not matter only what you think is value, but what also the consumer think is value. That's what makes a difference. We are sometimes challenged when we push for digital payments. We push a lot of merchant payments. In this room, we all agree that cash is a problem. But to my grandmother in the village who has been living in cash, with cash for many years, seeing generations in cash, until we're able to convince that person that you have a problem, they won't adapt. So I think for me, the point I want to make is for adoption of any innovation, the innovation must be first designed for consumer to address the key problem that the consumer is facing. And that's what mobile money did back in the time. And how do you do that? You do that by, number one, using data. I'm happy that you also mentioned here. And we have a lot of data. I mean, all of us are in institutions, we collect a lot of data from consumers. I think the only thing is it's not number one, the storage. So it's like all over. It's not centralized. And then we don't have enough data scientists to look at the data. I'll talk later on it, expand more on it. So I think that's the main challenge. And not only online data, but also need to measure ourselves in the market. Because some of the things you can only unveil when you connect your online data and your offline data. I'll give you an example. We are doing segmentation for a certain product like 3 years ago. And you segmented a customer out high value customers, you know, your high value customer, your mid, you know, the traditional way of segmenting. And then we found some key trends on some of the customers. They transacted very high usage because we segment based on usage. And in our minds, we thought these are, you know, the bank CEOs, the, you know, people, you know, we can say are rich. When we went to the market, what we found was very interesting. These are people in the local markets. They are the dalalis who are receiving, you know.
Who are dalalis for those who don't understand? Right?
So these are people, the middlemen. They are receiving, you know, farm inputs from the regions, sell them and then send back money. It's high volume. Now imagine if you design a product getting this person from the boardroom just by looking at high level of your data. I mean, you design a wrong product and then the product. So I think every single week when I look at TVs, radios, I see new products, new products, new products. The question I ask is, I mean, what are we solving? And that's why after 6 months, actually we launch products and they're not picking because they're not addressing the key issue. So I think for me, the big point that I want to really emphasize is on product design and looking at data, but also immersing ourselves in the market. And then also on the same aspect, designing for consumers, I think we need to also look at inclusive design. I mean, inclusive design here, what I mean is, do we understand our customer? Because when you say consumer, it's not one person. Can we know our customers? FinScope report, interesting, shows that only 54% of adults know multiplication. Only 56% of adult population know division. But you see a lot of campaigns saying 10% discount. I mean, who understand that? Right? Even our interest rate, who understand that? When you say interest is 15%, who understand? So I think it is inclusive in that aspect. We understand our customers, we understand their behavior, and we really design for them. But inclusion also means so excluded, like marginalized, like these people with disability. We launched recently at Vodacom channels that will also support people, you know, have difficulties in hearing. I mean, deaf, to support them because, you know, they also use our financial services. If they want support, how do they get support? Right? So we started positioning in some of our Voda shops, people can, you know, can support them. But another issue for adoption, which is also key, is what was discussed early, is on ID, identification. I think we have a big issue, and it's an elephant in the room which you're not addressing. If you look today, FinScope report shows very clearly that despite the good effort that we've done on NIDA, but only 57% of the population have NIDA IDs. Right? So SIM card and phones is a basic right. If I'm blocked from accessing it, either using direct way or I'll be completely excluded. So what is happening in the market is, I mean, I'm a father, I've got my wife, I've got my, you know, housemates. All of them are using one ID. What that creates, it will be very difficult to unlock future use cases. Because if I want to create a product targeting women, I don't know APMAC is a lady or is a man. It's very complicated because you cannot. So I think we need to really come with a solution that will make it easier for people to access, I mean, let's say like digital KYC, which will be inclusive. I mean, everyone will be able to get an ID so that they can access financial services, because otherwise it's going to be a big chaos in the market in terms of innovation and technology going forward. So I think I'll end with those two. Maybe later on expand on other 2 points, but conscious of time, I'll end up there.
Thank you. We'll get time to go.
Thank you so much. Epimaka, a round of applause for him. And now we go to Engineer Ndomba. You head the e-government. E-government. So almost like what we've heard from Dr. Sausi, but then from a very bigger picture in terms of the e-government initiatives that you have and what you've been doing in building up a digital economy in Tanzania. And so what government initiatives do you currently have or are foreseeing to progress towards that will really elevate this country to the next level of providing it to become a really digitized economy, but not only from the government, but also facilitating efficiency that will enable government efficiency in terms of the market? Welcome, Engineer Ndomba. Thank you.
Thank you very much. I will start with giving a simple definition of the digital economy. The European Commission defined digital economy as the economy based on digital technologies, while the G20 defined the same as a broad range of economic activities comprising of all jobs under the digital sector, as well as digital occupations in non-digital sectors. So it covers the whole spectrum. Now back to the core question on what government initiatives are towards digitizing the Tanzanian economy. I will speak of 6 areas very quick. The first one is infrastructure. For the digital economy to work, we need a functioning infrastructure, and that we have the basic facilitative infrastructure like power, but we have the main one, the digital infrastructure. The government so far has a national ICT broadband backbone, which covers all regional centers, and there is an effort now to reach all district centers. And also there is an expansion of the aggregation points, those points where you can tap the digital services from 40 to 67. And also in ensuring inclusion, the infrastructure goes to rural areas. There are areas working on the power part, but Universal Communication Access Fund is working on the communication part in collaboration with MNOs. And so far, we have an overall coverage by population of 96% on mobile. But that is not the whole 96 can support the digital economy, because based on the technologies, we have 96 for 2G coverage by population, but on 3G we have 77%, 4G we have 65%. And now the main effort which is being done by the Universal Communication Access Fund is to upgrade the 2G to 3G. That means to lift the 77% to much higher, to be able to come to 96, and that will be the whole population will be 96% will be covered, will be able to transact on the data layer. The second part is governance and regulatory environment. The government has established some institutions as well as some legislatives for enabling the digital economy in Tanzania. The institutions include the Ministry of Communication and Information Technology, the TCRA, E-Government Authority, as well as the ICT Commission and some ICT universities. But only the state part, we have this Cybercrime Act, Transaction Act, Personal Data Protection Act, and E-Government Act. All this is just trying to create a better regulatory environment for the digital economy to flourish. Also, the government has been working hard on the building up enabling platforms and technologies. Here we're talking of shared platforms like the government e-payment gateway, the TIPS, which was launched yesterday. We have, just for information, we have water utilities. Now they have one platform for the whole country. And all this together with government enterprise service bus that allows the government system to exchange information. All these actually are connected to all banks as well as MNOs to simplify the payments and create an environment for the digital economy. The other effort, the fourth one, is on the human capital development. I think everyone is aware the government is working on reviewing the curriculum for the schools and colleges to accommodate mainly STEM, means science, technology, engineering, and mathematics part. There's digital clubs and TCRI, which is open to the public for capacity building. We have incubation centers and internships available for various institutions, including the e-government authority. We have about 100 openings for interns and volunteers. Now they're working on that. The main aim is to build capacity on the new technologies and give the environment for developing the skills for our youngsters. And the fifth one is cybersecurity considerations. This part of the government has done a couple of actions. First, operationalization of TZSAT, which is under TCRA for just monitoring the cyberspace of the whole of Tanzania. We have the cybercrime unit with the police force, we have EGSOC for e-government. This is oversees the security of government applications and platforms. We have various skill sets of building efforts. And we have national cyber security strategy that governs or directs how we should keep our cyberspace secure. And recently, the government launched the Commission for Personal Data Protection. And this is responsible for ensuring operation of the personal data is secure in the country. And my last part is on the research, innovation, and adaptation of emerging technologies. The government provides internship for youngsters in emerging technologies of artificial intelligence, Internet of Things, machine learning, blockchain, big data analytics, and all those. Specifically in the Center for E-Government Authority, we have even built cryptocurrency infrastructure, and is a pilot. Our objective is not to work on the policy part. You know, there's a BOT working on the policy. We're working on the technical aspect of it, and we have a team just building capacity as a country. Whenever the government decides to go for cryptos, then we should have that capacity and the knowledge. So we have tested the blockchain and the underlying infrastructure, the blockchain and the CBDC, the central bank digital currency, and the commercial one. So all these are areas we are trying to build capacity to make sure we don't be taken by surprise. And lastly, I would like to say the key issues to be considered in adopting the digital economy. The first is to make sure we involve all sectors of the economy. It is not a technical issue. It is a business issue. The technical is just for as an enabler. And the second, I think it's better we facilitate and formalize online businesses. There are a lot of online businesses, but they are not, I would say they are not formalized, and that we cannot get much out of it. The third part is enhancing digitization of government operations and strengthening whatever I said before. And the last one is increasing citizen trust on online services. And that means we're talking of privacy and security, cyber security assurance, and service availability as well as user-friendly systems. Thank you very much.
Thank you so much. A round of applause to Dr. for Engineer Ndomba. Ladies and gentlemen, I will open the floor, but I want to go back to Dr. Kamal and the rest of the panelists present here for only one question. And this question relates to, so where are we going from here? I've heard us talking about emerging technologies. They've been touched here and there. We saw the presentation for Professor David West. And we heard from Kamal the practical issues that create resilience in terms of ensuring that you proliferate, you create ubiquitous services across an economy to retain resilience. But what next? What are the new frontiers? What are the new ways to look at things? Just with a few sentences, if you can just pick one or two, either you're addressing it from a perspective of regulators, could be you regulators do something better, or we in the market, we should push something better. I'll start with Mr. Kamal. Since you're online, we give you advantage of giving us advice for the future. Over to you. Kamal, are you still there? All right, so Kamal has logged off, so we'll start again. If you don't mind, we start with you, Faris. Thank you.
Yeah, very briefly. We spoke earlier in the conference and throughout on the question of cashless. So let's take a bit of a stock on what it means to go cashless. FSDT came out with a report earlier this year that indicated that still the vast majority of transactions are in cash. And we've had mobile money now in Tanzania for almost 15 years. And if take one segment, say grocery segment, where Kamal had talked about this in terms of resilience of payments, everyone will buy groceries every day, regardless of what's happening in the world. 98% of grocery payments are in cash in Tanzania right now, according to the FSDT study. So the question then is, if digital payments are available, widely available, why is it that consumers are still spending in cash? And I think this comes back to questions of value proposition, questions of trust intermediation, et cetera, et cetera. I think one thing we would very much need to focus on with respect to moving towards a cashless society is to understand what are the incentives that take place when either online or digital transactions happen. So I'll refer to my colleague here who mentioned on online payments. Right now in Tanzania, there's a huge social media industry around e-commerce taking place. Right? You post something on Instagram, someone goes and buys it. But in fact, most of those payments aren't even happening in digital. It's an e-commerce payment that happens in cash. What happens? They don't trust. There's simply a lack of trust in the entire infrastructure payments ecosystem. It exists. Now the question is, how do you move from a system based on money movement, which is taking money from one individual and moving it to another, into a system based on commerce facilitation? Okay? If you look at credit card payments that take place all around the world, the value of the credit card payment isn't in the movement of the money, it's in the facilitation of the transaction. So Amazon has become a $1 trillion company because credit card payments exist. If credit card payments did not exist, Amazon would not exist. Okay? Now you're attempting to do e-commerce in Tanzania. Actually, the mobile money infrastructure does not address the issue of risk the way credit cards do. Okay? So how do you build trust facilitation into the payments ecosystem? And one of the things that we're doing, in particular with M-Pesa, via Sarafu. So Sarafu is the e-commerce engine for the retail shops. The next step for us in terms of going from cash to cashless is to now build in the incentive for the shop owner and the actual end consumer to purchase digitally. Okay? And we are, in part, the reason we're building this ecosystem between M-Pesa and Sarafu and Azam is to facilitate that trust required and that incentive required to actually go cashless. So unless you address the entire value chain from the manufacturer to the retail shop owner to the consumer, understand what are the points at which they decide not to use digital, you won't achieve that result. So that result must be achieved through understanding those incentives and building those value propositions out. And that's one of the things that we're trying to do with M-Pesa is to understand how do you address the incentive, how do you build the product, how do you understand what is the consumer's perspective, and then address those challenges as they come.
Thank you so much, Faras. Over to you, Mr. Engineer Ndomba. What's the future like from the government side on digital issues?
I believe the future of financial services is dominated by digital-enabled financial services. And what we need to do, I believe we need to embrace the emerging technologies, readiness to invest, and readiness for transformation. But on top of all, we need these top players to be collaborative. We had, for example, we had my colleague has mentioned here, there is just a simple issue to share some sort of payment, and then collaboration has been a bit difficult between the players, the service providers, payment service providers. So moving into this direction without collaboration, you will not get much out of the technology. The other thing is for regulators and policymakers to be proactive in adopting the new technologies so that we have adjustment on the regulations to suit the new environment instead of taking much longer or number of years to revise our regulations. Lastly is to invest more in capacity building, both for workforce as well as the clients and general public. Thank you very much.
Thank you so much, Engineer. Yeah, say that to Dr. Sausi. Over to you.
Yeah, thank you very much. On the perspective of the innovation and where we are going, first I would like to look on the quality of the product that the player outside there are giving out. What we have seen with this emerging technology, we can now have a very good researched product, the product that can be stable, product that can be secure and reliable. Therefore, once we have that with the technology that currently is emerging, then we see that we'll be moving forward with very well structured product. I will give you an example, just a little one. For instance, when we look at the product in insurance perspective, we had this product group insurance, Bima Vikundi. I think you all know that. That was one of the brilliant products in the market that came, and I think everyone here, we either participated or we were involved in finding the information. But when you look at this product, on my perspective, was not very well researched and was not very stable. The first year, much of us, we went into that product, but unfortunately, then we started going out. At least on my products, on the groups that I was, I can tell you 50% were out from the product. Therefore, what I want to put here is, the product has to be well researched. The product has to look at on the customer. Customer awareness should be very well. With the emerging technology now, we can use VR, as the professor said. We can visualize the product even before getting in. There's that thing we call gamification. We can have a product that is like you are playing a game. You're just playing a game, but you are already in the product. Therefore, that's the thing that we want to see in the future. You have to look at the experience. For instance, if you give a product to the rural area, which we are talking about the Internet of Things. I don't have even electricity. How can I use the Internet of Things? Therefore, we have to look at the product with the emerging technology. Those works fine in our environment. Thank you.
Thank you so much. I can't agree with you. Being real, being appropriate, and focusing on what's happening in the ground. Over to you, Epimac.
Yeah, thank you. I think when I look at the future, there are a couple of things which are changing. Number one, I think in the next 2 years, we're going to have more smartphone users than feature phone users, which is a good thing for the economy. I think the penetration of smartphone in some of the telcos is around 40%, and it's growing at a very fast rate. So that will really change how we interact with our customers. Secondly, I think the future will need a lot of what we call hyper-personalization. We spoke in the morning here about customizing products. So today we have got what we call static products. I get the same offerings as anyone else, but with technology now, AI and big data, we're able to give you the products based on how we know you, hyper-personalization. So I think that is very key. Using technology also to recommend products. Today you get an SMS saying buy this product. And actually you completely, you don't even want that product. In the future to see is we'll be able to predict more and know which product you're going to consume. Technologies will change the way we support customers. So now there are discussions around what we call beyond real-time customer support. We are able to detect the problem before you know it and fix it even before you as a consumer know it using AI and big data. Technology also impacts the way we do our business in terms of what we call customer value management. So in mobile money and telcos, I believe in any business, you have your acquisition strategy, your customers, but also you've got your churn. A lot of customers are leaving. with technology now, we'll be able to predict before you even churn. We'll be able to know that in the next 3 months, Mr. Kennedy will leave the network, and be able to know why you're leaving, and be able now to really target you with respective reactions to make sure that you continue. So I think technology, I think one big thing that we need to invest is talent, capacity building. We have shortage of talent in emerging technologies in Tanzania. I'm now managing a crisis. We have been able to train a lot of young resources from our universities, but now they're up for grab, everyone. So it's a sign that of a big issue on talent. Yeah.
Thank you so much, Epimac. A lot of points that are coming out from all these discussions. Professor, over to you.
Thank you very much, and I'll be very brief. I think just responding to some of the things in terms of what the future looks like, I think cashless is a myth. We're not going to go cashless anywhere in the world. We're going to go cash light, but not cashless. Then I think also let's be mindful that technology is not a magic bullet. You know, technology can do everything, but then again, it's not a magic bullet in that sense. So I think it goes back to what I think Ahmad said in terms of what's the proposition. And we really need to think about it from the lens of the customer. And I think this is where I want us all to take a step back. Who is our customer? What are the behaviors of that customer? And what context is the customer operating in? So I run a product innovation lab at the business school, and we bring financial institutions in to help them think about products for the underserved. And one thing we've learned is that a lot of the products they've built, going back to your comment regarding the uptake is not very high, is that they've been built sitting in their offices, not really going into the field and understanding how are we going to engage these customers and build around their context and around their needs and around their problems. So we build an app and we say, oh, I have an app. But then again, all the customer wants to do is a very simple thing. It might be embedded in the app, but it might be too much for him to do. So we need to take a step back and be more customer-centric. We need to do what we said. We need to build talent. And the talent is not just on the production side, but also on the consumer side, right? Because the customers also need the re-engagement. And I think when we're thinking about this, we need to think about the domains of the business models we're working in. If you're in a B2B context, it's easier, right? If you're in a B2C context, it's a bit more difficult. So those concepts and those ideas, but it's about being wise enough to apply the technology in any of those sectors. And I think most important, how do we co-create with our customers? How do we ensure that they have a sense of belonging in the product or service we're developing? Thank you.
Thank you so much, distinguished panelists. Can we just give them a round of applause as we move to the second and final stage of our panel discussion? Now it's a floor discussion. And I'll give the privilege to, so many hands. But before you get your hands, today is Women's Day, and we have a special woman here, Angelica Pesha, Tigo Pesa Director in the, so I don't know where you are, you can just stand, take a mic, and ask your question or make a comment that you want to do. Please, Angelica, welcome. And I give you 3 minutes. Welcome, you can take the podium. A round of applause for Angelica, please.
Good afternoon. Before I speak, thank you to the amazing panel. I think you delved into a number of interesting ideas and activities that are going on in the market. So I'd like to comment on 3 aspects. One, we are talking about what future do we want for the financial industry. I think we cannot say we can go anywhere else without collaboration. Collaboration is very key now and even more as we go into the future. But I would like to highlight that this collaboration needs to come at a point where both parties are getting a win-win situation and not a collaboration that is looking at either party. So it's very important for us to collaborate, but ensure we are getting the value from each of the parties that are involved. So it's very key. It's not about collaboration for the sake of collaboration, but what is the value that both of us are getting so that we can serve the customer even better. The other aspect, 2 challenges that we all have to take care of, And I'm not sure how, because I feel we haven't yet gotten there. One is the trust. We are talking about customers not having trust in the financial services. So what are we doing about it? How are we building that trust? It's not something that any of us can do on our own, but again, it comes back to collaboration. We need to work together as the players in the industry, the government, the central bank. How do we bring back the trust? Customers can trust digital as much as they trust the cash they see every day. What do we do? What are we going to do about that? I think until we can work together, collaborate to get there, we still have a long way to go. Lastly, the panelists were talking about the future. And in the future, we are talking about specific personalized products for customers. How do we get to personalize these products if we don't even know who our customers are at the identification level? So we still have NIDA as the biggest challenge. We have a lot. I think in one of the presentations today, we had about 37% of people who took loans are not even, identified as the same people or the real people. So how do we get that challenge out of the way? Because if we want to really reach everybody, we need to be able to identify every single person so that we can give them the right services and the right value. With those comments, thank you very much.
Thank you so much, Angelica. Ladies and gentlemen, we'll start with the online question, which are going to be read by the MC, and then I'll need to take out my specs. So I have Dr. Mushnish, I have Dr. DG Rayleigh, and then we'll go to, can't see you properly next to, is it right? Patrick, yes, Patrick. And then, okay, so I'll start again, just continue. I'll go with the order. I'm getting confused now. Please go on.
Thank you, moderator. We have a question from Orbit Security. The question states as follows: could disintermediation in the financial sector become a new normal in the face of technological advancement such as blockchain and mobile gadgets? Where do regulators stand? Will we need to rethink monetary policy implementation, or how about cross-border transaction monitoring? And do we need monitoring after all?
Okay, that's one. Second question, I saw you on your note. Mr. Ndomba?
He has the question.
Oh, he has the question. So this first question will be addressed by Professor, and probably, all right. I'm just distributing the questions first. Then Dr. Munish, and then you come Mr. Rayleigh, and then Professor Ishongoma for your questions, and then we take the other questions. 3 more questions. Please proceed. The mic.
Okay, thank you, Chair. Mine is not a question, actually, just a comment. First of all, thank you very much, all the presenters, for the very good presentations. But I just want to make a comment based on the presentation made by Mr. Kamal Kader from Bangladesh. That I totally agree with him that the fortune is at the bottom of the pyramid. When we look at the income of the people, we have very few at the top and many down here. Therefore, the fortune is at the bottom of the pyramid. Now, if we have technology is going to help us in that, is going to change. And actually, the example he gave and equating it to our beautiful Serengeti here is very relevant. Now, I have some practical example from my previous undertakings, which actually helped us. In one of the organizations I led, we came up with a strategy, and the title of that strategy was going to the masses. It means going to the bottom of the pyramid. And it actually helped to turn around the organization. Of course, in one aspect. But when we wanted to do the other aspect, we had some issues with other stakeholders, then it stopped. But that is very, very important. But my second point.
And Richard, going to be brief. Thank you,
yes,
Doctor.
very briefly. Why do we not have these uptakes on cashless, people using cards? I think we also need to relook at the cost. Cost involved. Going back again, we need to go to the customers and talk to them. Because sometimes customers think that if I withdraw my money and do these transactions using cash, it's cheaper than using these digital. Yeah, but that I think is the issue here. I know there will be some defense out of that, but that is the key issue. We need to relook at it. Thank you. Very much.
Thank you so much, Dr. Masood. Mr. Raleigh, over to you for the comment or question, and then we go to Professor Shengoma.
Thank you very much, Mr. Moderator. I just wanted to commend the panelists for a very good presentation, and I was really impressed by the presentation of Mr. Faris and Mr. Nomba, the head of government Mtandao. One thing that I think let's go out of this meeting with is a very firm resolution. We've been talking about all these measures, and I'm really impressed with what head of government system was saying, that there is everything. But if you compare us and Kenya, you find that Tanzania, the cash transaction are almost 80%. 20% only is done digitally. So how do we come out of this situation? I think we'll be meeting here next after 2 years with the same topic of that we have a system, we have this problem, but there are no solutions to the problem that is existing right now. So I would suggest now let's come out with a roadmap that will enable us to change these problems, change all these challenges into solution. I think let us agree on that. The other thing is just like what was pointed out by my colleague Mohsin, we are having a problem of a conflict between the policies and implementation. For instance, if we're encouraging people to use digital instruments, for instance, if one wants to draw from his account to a mobile bank, the charges that are imposed on that particular individual is so exorbitant that somebody gets discouraged. So what are we saying? Are we saying that people should continue be queuing on the banking halls and create havoc? I think it's time now to reconsider the costs that are charged for digital services be lowered down so that people can access these services. Chair, thank you very much.
Thank you very much, Mr. Reddy. We are required to walk the talk. Professor Shengoma, please, over to you.
Thank you so much, the presenters, as well as Dr. Mohsin and Mheshimiwa Mr. Relia. I think the issue of costs. I've seen you talking about the future. You are considering trust, but you have not talked about the cost. I think it's very, very important. Let me give you an example. There was a day I was there at Mlimani City. I wanted to buy something from LC Walkiki, and they told I didn't have enough cash. Then I decided to use Lipa number, and then 3,000 was gone, just for one transaction. Imagine if I withdrawn my money from the ATM, how much would I have paid? I think it's less than that. Withdrawing 400,000, and I can make all my transactions there at Mlimani City. So we have to think about the costs, because look, if me, Professor, I'm using cash, what do you expect people from the village? Yeah. unless they are not able to make that analysis. But if they are able to make that analysis, they will not go with this, I don't know, LIPA number or whatever transactions. So please, we have to look on how to reduce costs. I liked the example from Sarafu, the issue of the cost of sugar, and how you are able to come up with that, I don't know, digital payments that control that. I think that I was wondering, is that also incorporating some other products which are not offered or produced by ASAM, or it's only ASAM products? If it's all other products produced by other companies, maybe it will also help, because I look at it as a way of reducing information asymmetry and taking out those people who are taking advantage of that. But again, can we use that technology? As you have seen in my presentation, high level of differences in pricing of loans. So if you take sugar as a digital loan and they try to invent more, can we have that technology being used? For example, I want to borrow, and then I go to that, that app, and I could see where I can borrow at relatively better cost. And I think that way, transparency that way, can even force the providers to think more that, okay, let's go on value, but not because you are the user of Voda, you have only access to Voda products. And that's where the issue of collaboration coming in. When we are talking about thinking the future, I was still thinking, is there a situation you can have only one SIM card and all the providers integrated into that one SIM card? I think that will be very wonderful.
Thank you so much, Professor.
I don't have to carry several, if I have 3 lines, I'm forced to have two. And we are talking about managing the environment, yeah? So I can have one and one SIM card in my phone, and I can access all the services. Talking about the future, is that possible?
Thank
and
you.
the next, the last one,
All right,
about the personalization of service. I think here I liked the issue of bringing NIDA into it. That is there a situation where all people maybe who can access these services having NIDA, and then we personalize? Because remember, we have our kids, and our kids are encouraged to use these gadgets, yeah, to learn. One way of learning, and another way, you know. Then I was wondering, can we make NIDA to start from the age of 10, maybe, so that even this category from 10 to 18 to have access to this service, but please, then you personalize. You don't send those adverts about borrowing to the kids, but you can encourage them to save. Maybe they can just save a small amount.
Thank you.
And then you can also encourage them to borrow, but then they borrow 500, 1,000. Yes, thank you.
Thank you so much, Prof. For interest of time, let's hear the response for, there were comments, but let's get response, and then we'll go to 2 more last questions. But we start with Faras. You have direct questions. I think you picked them. Yeah. Can you give him the mic, please? Pass him the mic. And just be brief when you answer those questions.
Yes.
Others will take them from during lunch for bilateral discussion. Go ahead.
Thank you for your questions. Just answering them quickly. One, Sarafu sells all products. So we don't sell only ASAM. We sell even Afia. We sell, everybody is on there. So the price control mechanism that I mentioned for sugar is being used by multiple manufacturers right now, including even Pepsi came to us recently and said they're struggling to control their price. So we offer it to everyone. It's not based on who's manufacturing. You mentioned the marketplace model. Actually, we are doing that right now. We're working with a number of banks to create a transparent credit model on the same application. So in fact, right now, we are offering credit to any trading shop in Dar es Salaam that they can purchase their supplies via that credit, and we hope to create that transparency on the marketplace so they can decide which service provider they want to provide the credit to purchase their supplies. With respect to the SIM issue you raised, Azampesa itself is SIM independent, so you don't need to have any particular SIM to register for Azampesa mobile wallet. And that wallet also, we are looking to very much address cost from Azampesa. So right now, we have already determined P2P transactions on the Azampesa network to be without cost. So we are very sensitive to that issue, and we also understand for us, the key for Azampesa is commerce facilitation, not money movement. So commerce facilitation meaning how do you get a buyer and a seller who are unknown to each other to transact using that digital payment method and be trusting, using ourselves as a trust intermediary, which is essentially how e-commerce has proliferated across the world through credit cards. Credit cards address the risk issue by acquiring the payment from the consumer at the end of the month. Mobile money has still to build that feature, so we're really focusing on how we can develop Azampesa in that direction.
Thank you so much. And now there are two questions, one relating to NIDA. I'll ask Mr. Ndomba to respond to that. But then there was another comment relating to walking the talk. Just, Dr. Sausi, if you can mention, are we going to come up with a roadmap? Are you guys going to ensure that we all sit together and make Dr. really happy? That next time we're not coming here and discuss about cost, about cash light and the like. So a quick response to that. We start with Mr. Ndomba.
Thank you very much. There's a question from Mr. Martin Kayora on the coverage, 96% for 2G. So let me clarify with you.
Yeah, please go ahead with the first one.
Yeah, it's written in Swahili. Asilimia 96 wanatumia 2G. Hapana, haikuwa na maana hiyo. The coverage ni kwamba wamefikia, kwamba pale walipo amefikiwa na teknolojia ya 2G. Kwa hiyo akiwa na handset ya 2G anapata mawasiliano, lakini akitaka service ya 3G hataweza kupata. Lakini wale asilimia 77 wamefikiwa, wanaweza kutumia 2G, wanaweza kutumia 3G. Wale asilimia 65 wanaweza kutumia 4G, wanaweza kutumia 3G, wanaweza kutumia 2G. Na maana wamefikiwa na teknolojia hiyo. The second one, let me reply on the unique identity.
Exactly. Yeah.
That's a very big initiative, and Madam President has directed to make sure we have unique ID for the whole population, and the effort is ongoing in collaboration between the Ministry of Information and IT and the NIDA. They're working together to come up with Jamii number that we identify uniquely from birth to death and for foreigners from entry to exit. So this is on.
That's a very big thing.
Yeah.
Yeah. Thank you so much. And when do you expect that to be completed? The market is eager to hear. When will the project end? Lini tunapata jamii?
This, I think, the initial time frame was 18 months to 2 years.
Mm-hmm.
So probably it can go a bit faster than that.
Yeah. All right.
Thank you very much.
Dr. Sauti.
Yeah, maybe just to add on what he said, we expect that to be at the end of 2025, maybe. Because as we speak, the team now is in place and working on, we have finished the design, because we collaborate, Rita, NIDA, and Zanzibar ID. Therefore, the technical team now is in the place. Therefore, we expect maybe next year, end of the next year.
Okay.
Come back to the Mr. Ray question about we are just saying a lot of discussion here. Maybe to say we have been putting some of things in place. With your neighbor there, we have been working with this for like last 3 years, putting in place a digital economy strategy. And then we have been working on this, and this one has already been approved. And we have been working on the aspect that when we have this body and moving on the direction, then we hope by, I cannot say next COFI, no, maybe the other one. We have a lot of strategy that we are putting, and I can say most of the things that we need to allow from what we are saying now have in place. For instance, they said about the infrastructure, they said about the digital literacy and all those in application. You compared with us with Kenya. Yes, we agree with that. One of the things that we do already have, we have a number of products that are in market which are performing very well, even more than what Kenya has. But the problem is the professors are not publishing outside there. Thank you.
Thank you, thank you. You've thrown that very, very important point. We need to communicate what Tanzania is doing. That's our weakness, and we have to admit that. All right, so now there are two more questions. Yeah, we take two, and then there's an online question. Before Sos you come, Patrick had raised his hand for so long. I think, yeah. Patrick and the gentleman right ahead of me, yeah.
Thank you very much, Kennedy. My name is Patrick Mususa. I'm the Executive Director at Tanzania Institute of Bankers. I only had a comment and suggest, just briefly. I had so many, but I want to stick to one. We have seen it in my recent experience with the capital markets, and I recognize the presence of the CEO of CMSA here, Mr. Nicodemus Mkama. I was grateful to have worked at the capital markets for 2 years, and I've seen banks, comrades to the financial, the telcos who are providing financial wallet services, advance to the capital markets very quickly in a short period of time of less than 5 years, if I'm not mistaken. They have taken up roles such as market intermediaries, bond dealers, market makers, and so forth. I think while we are talking about the retail customer, we should be thinking of ourselves as problem solvers, and I agree with Epimac. But so far, we've provided them general savings and borrowing facilities, but we haven't provided them investing facilities. And I think the bouquet of services that are available to the common man are more than just borrowing and saving. And I would encourage telcos to also, like banks, think about other opportunities in the capital markets where it's still very much untapped. We recently saw the CMSA do something very wonderful recently with the support of the stock exchange to launch Hisa Kiganjani, enabling investors to buy from their phones. TIPS has just been launched, and the two just need to integrate, and it's a very simple integration to bring this to the common man to be able to now reach the capital markets.
Thanks, Patrick.
But with that, the inclusion then will provide the platform for you to make other services more affordable and more accessible and more resilient for your consumers. Thank you very much. I appreciate it.
Thank you very much, Patrick, for the inclusive investment that needs to take.
Yeah, thank you. Thank you very much, Chair and the panelists. My name is Dr. Godfrey Joaquin from Mosh Cooperative University. I'll be very briefly. One of the panelists said that they are doing well in terms of infrastructure that can support mobile connectivity. That's great. However, I thought that because most of the sub-Saharan Africa right now are ranked very low in terms of mobile phone connectivity, including Tanzania, that is ranked very low even when you consider East African countries. And if you look at data from the global system of mobile communication system, you will find that European countries, America, or OECD countries are now struggling to enter into a 6G generations, while we in Tanzania, we are now considering issues of 3G, 2G, and 4G, and 5G is even very low. I thought, and I think that perhaps my brother there can say more, why can't we think of the infrastructure that can support 6th generation right now? That's where the world is heading. That's first. Secondly, in terms of cost, you really wonder that I was in Rwanda, if we have 20,000 Tanzanian shillings, you get a 30 GB for a month, and you cannot finish But here in Tanzania, with 10,000, you get 4G that can be finished within 1 day.
Thank you so much. One last question here, and then we finalize. I have only 5 minutes. We're finishing at 40 past. So your question should be very brief, Mr. Sostenes, and directed to any of us, or if it's a comment, please go ahead.
Thank you. I have 3 comments, but they can be also reinforced by the speakers. The first one, with respect to use cases, and from my friend from Nigeria, what do you think will move the mountain in terms of money flows? Now we have tips. Most of the use cases are P2P, and that's the story we have in Tanzania and many other countries in Africa. What would be this killer, app or use case to really drive cash light economies? That's one. Secondly, to the banks. I'm looking at the future of credit. Since this is about, intermediation, therefore allocation. The revenue models are still very interest-based. We see technology bringing new avenues for revenue generation. So we think about credit creation. We have digital credit right now. What will happen to the retail banking, at least to the retail banking now, when digital credit for businesses is actually possible? Where will you be in terms of flourishing the business? The last one is on data and analytics, and it starts with understanding what works, what doesn't work. So in this meeting, I also expected us to look at the developments we've made from the Financial Sector Development Master Plan, for example. There's a promise that we want to contribute up to 10% of the GDP by 2030. Where are we today? And where are these developments going to take us? So taking stock every time and again, understanding where we are doing, what we are actually achieving, what we are failing, and how we are failing would be very important so that we can actually push these innovations, recalibrating the resilience discussion, building scenarios of the future, because resilience is now looking at crisis 27, 28, COVID is not helpful enough.
Yes, give us 2 minutes for the professor to respond.
Thank you, I stop there.
Thank you so much, I really appreciate it. Both, you can respond on the 2 questions.
Basically, thank you very much for the question, sir, but I think the killer app would depend on the context. In some markets, it's G2P, right, in terms of government payment. So I think he spoke about the government payment gateway. To what extent is that facilitating social investments and payments? So we have, I think for me, what I'm hearing is that all the pieces are there. It's now how do we stitch them together to drive the application and drive throughput down market in that sense. So I think that's really it. And don't forget that these businesses are scale. So even when we want to drive down costs, we forget about costs to serve. We're only talking about costs to use. How about costs to serve? Because the businesses also need to stay in business. So I'll stop there. Thank you.
Thank you very much. So with time, we'll just skip the other responses. And because the MC is already there. Please, ladies and gentlemen, I've taken notes. I'll submit them to the Secretariat. But we've had very outstanding remarks, points, actions, and key initiatives that we need to take forward from here. Without, please give a round of applause to the panelists. And thank you very much.
Thank you very much, Mr. Komba, the moderator of the session. And we are about to wind up the event. Please, the photographers, we will take a group photo. And while we are taking the group photo, I wish to announce some few people who are needed outside through that door. Mr. Musin Salim Masood, Mr. Epimac Mbeteni, you take the photo and then you proceed, and Mr. Dr. John Sausi. While the photo is on session, may I please make some few administrative announcements? After we close the meeting, The administrative team has arranged for transport. They will send an email to all of you with the number of the driver and their name. Please call the driver so that you can confirm with him the pickup time from the hotel. As for the executive office and the former executive officers from BOT and the board members, the heads of parliamentary committees, your transport arrangement has been made, and the protocol officer will contact you to give you the pickup time from the hotel. Deputy Governor, Bank of Tanzania, distinguished guests, ladies and gentlemen, thank you so much for your participation in these sessions. We're now in the final stages of the event, and I wish to call on the stage Mr. Epmak Mbeteni, who is the M-Pesa director from Vodacom and the representative from the Tanzania Mobile Network Operators Association, TAMNOA, who will give a vote of thanks. As of now, Mr. Mbeteni is outside there. I will give some few minutes until he's back so that he can give a vote of thanks. We do have some participants who have confirmed to attend excursions later tomorrow. The vehicle will depart from Mount Meru Hotel tomorrow at 11:45 a.m. and the organizers will keep in touch for more information. Welcome, Mr. Mbeteni. I'll invite you for a vote of thanks, and after you've given a vote of thanks, I will invite the Deputy Governor from Bank of Tanzania, Dr. Yamungu Kayandabila, who will represent the Governor Bank of Tanzania for a closing remark. Thank you, Mr. Mbeteni.
Esteemed guests, I would like to express my gratitude to the Bank of Tanzania for extending an invitation to this significant event, where representatives from financial institutions convene to deliberate on matters of shared interest. We deeply appreciate the Bank of Tanzania recognition of electronic money issuers, EMI, and their pivotal role in financial ecosystem through our association, TAMNOA. As highlighted by various speakers in the discussion over the past 2 days, the mobile money ecosystem plays a crucial role in fostering financial inclusion within our country. The symbiotic relationship between electronic money issuers and the banking sector is essential for serving diverse population of our people in both rural and urban areas. It is imperative for both banks and AMIs to collaborate and strive more towards developing innovative products and services that cater to the broader needs of our people. Ladies and gentlemen, we also want to extend our gratitude to the Bank of Tanzania for introducing the Tanzania Instant Payment System, TIPS. As explained in the video presentations yesterday, TIPS addresses several challenges faced in previous bilateral agreements. Issues such as liquidity management, reconciliation due to maintaining multiple accounts, and integration costs are mitigated by this initiative. We applaud the bank for this forward-thinking endeavor and anticipate that TIPS will serve as a crucial infrastructure for a variety of innovative payments, products, and services. Ladies and gentlemen, the operational efficiency of TIPS has shown steady improvement over time. The positive collaboration and ongoing engagement between the bank and TIPS players have accommodated various considerations, contributing to the refinement of this vital payment scheme. We remain optimistic that TIPS will continue to enhance its operations and evolve even further. Ladies and gentlemen, to the financial sector, as electronic money issuers, both individually and collectively through our association, TAMNOA, we are committed to collaborating with all stakeholders in the financial ecosystem to efficiently serve our people. As emphasized during the discussion, particularly in times of economic challenges, it is imperative for financial sector to unite and devise mutual beneficial strategies. In conclusion, I extend my sincere thanks to all attendees and I wish everyone success in their endeavors to serve our people. Thank you so much.
Dr. Kayandabila, the Deputy Governor, Bank of Tanzania, please welcome for your closing remarks.
Good afternoon. Wow, how I wish we could continue this. Yeah, but we have to, to close. I recognize our, honorables, Mama, Member of Parliament, Mama Kaboyoka, chairperson of Public Accounts Committee, and her deputy, of course, vice chairman, Honorable Asunga, of course, former minister of agriculture. Thank you very much. Thank you very much. And please join me for I should say maybe an extended round of applause to them and us all. Actually, for the exceptional commitment to this call. So thank you very much. I know he is still our colleagues. And maybe not many of us know Dr. Kibese. He's the one holding that initiative, His Excellency Ambassador, to Tanzania, to Kenya, representing our country. Former DG, Deputy Governor, Bank of Tanzania, has also committed. And Mzee Larry, 2 days with us. So, Your Excellency, Ambassador, asante sana. Thank you very much for your time. That said, ladies and gentlemen, I think, allow me just to go, direct. I know we still have some energy, but I wouldn't want to dilute that. So, as alluded to, our boss, Governor Emmanuel Tutuba, he had to rush. I think today there's a cabinet, so he's an ex-official member of a cabinet, so he had to attend that. So on behalf of my colleagues, deputy governors, it is with great pleasure that we conclude this vibrant conference, having spent 2 days immersed with a thought-provoking presentation and lively discussions. Of course, doing this, to fortify our financial sector resilience in the backdrop of challenging economic conditions. Many thanks to the collaborative efforts between the Bank of Tanzania and TBA for making our work easy in organizing this conference. To all participants, of course, the resource persons, you have been fantastic. The moderators, you have been fantastic. Thank you very much. Thank you very much. My sincere appreciation and the congrats go to, as I said, the presenters, panelists, both here and those who were online. We thank them. You have been generous, share your insights and experience in various areas of your expertise. You have managed to bring up real issues related to this year's conference. Again, thank you very much. A comprehensive record of our discussions will be circulated to serve as a valuable reference for implementing, these ideas generated during this conference. Ladies and gentlemen, as we have collectively acknowledged, the resource persons have not only sparked engaging discussions, but also offered valuable guidance for navigating the path ahead within the context of this year's theme. The conference resonated with several key takeaways. Allow me to highlight some few. I think one, the conference has compelling advocated for the development and implementation of strategic measures to bolster the resilience of our financial institutions during challenging periods. And this, we recognize the pivotal role of financial institutions in driving our country's growth. There is a pressing need for collaborative efforts in crafting policy, supervisory, and regulatory measures, as it has been emphasized during the discussions. The meeting also encouraged collaborative efforts for comprehensive risk assessment, ensuring that financial institutions are well prepared for unforeseen challenges, as converting these challenges into opportunities through capitalization of technology-oriented solutions, that is fintech, capacity building, making use of our academic institutions, as well as data management. Two, our speakers have underscored the importance of adaptive and robust regulatory frameworks that respond effectively to dynamic economic conditions. Embracing innovative financial solutions and technologies is key. Alongside, strengthening risk management practices and their timely implementations. Strengthening risk management is another aspect that came loudly from our panelists. This also calls for our institutions to strengthen our risk assessment by integrating both traditional and innovative approaches for identifying, assessing, and mitigating risk effectively. Third, our conference had emphasized the significance of digital transformation in the financial services to streamline operations and enhance customer experiences, acknowledging the progress in financial inclusion especially through mobile technology. And this calls for more robust cybersecurity measures to safeguard institutions and clients from evolving digital threats. So the call to invest in inclusive financial technologies underscores the commitment to ensuring accessibility for all segments of society, fostering economic resilience across diverse communities. So the huge unbanked folks, especially those in the rural areas, Tanzania and Sub-Saharan Africa, I think, or we think, that is an ample opportunity for innovative financial entrepreneurs through digital inclusions, as well as making use of new emerging financial products such as fintechs, climate finance, and financial entrepreneurship. Ladies and gentlemen, on tips, it is evident from our discussions that as we move towards the digital economy, the role of innovation in payment systems is critical in shaping the future of digital economy. It empowers individuals, fosters financial inclusions, enhances security, and drives economic growth as we stand at the intersection of traditions and transformation. Let us embrace innovation wholeheartedly, recognizing its power to create a more inclusive, efficient, and resilient financial future for us all. So as we wind up, we will need to strategize on some other silent issues that have come out of this conference, and clearly some takeaways towards a more efficient and resilient financial sector in times of crisis, which includes improving communication and transparency, increasing technical capacity and a budget for research and development, profiling risk and opportunities during challenging times, deepening our domestic financial markets to ensure sustainability, but leveraging technology and data analytics, as well as digital financial inclusion. So adopting this recommendation as shared responsibility will contribute to a more efficient and resilient financial sector, better equipped to navigate and mitigate challenges during a time of a crisis. Ladies and gentlemen, His Excellency Vice President is awaiting to see what our output, our input is. And our responsibility is not to list down the things to be done. No. I think is to strategize on how best we can implement them for the best results. So, as we wind up today, this afternoon, it means we have created a task that we must achieve, and we must agree on the strategies and timelines as soon as possible and start implementation immediately. So the end today is the beginning of the assignment to sharpen our financial sector resilience. So if you agree, I would propose that as we have come to an end of this discussion today, we still need to make use of BOT and TBA interactions to go through all the directives issued by His Excellency, the Vice President, and other deliberations which have come out of this conference, and come up with strategies to address them. So on this, I leave it to the organizing team to bring them up the proposal on how to go about it. efficiently. In conclusion, of course, in closing, my sincere gratitude goes to the organizing team. If we can rise up, please. We saw you yesterday, but please, if you can, yes. This is our fantastic team behind all of this. For the excellent management of this conference, under the leadership of DGs and TBA. Thank you very much. So I extend appreciation to all stakeholders and diligent individuals working behind the scenes, the IT guys, and everyone whose efforts have contributed to the success of this conference. So join me to applaud their hard work. I also want to express my gratitude for each one of you for participating in this conference. With that, on behalf of Governor Emmanuel Tutuba, I officially declare this conference closed, and safe travels and kwaherini. Thank you very much. Thanks. Thank you.
One more round of applause for the Deputy Governor, please. Thank you, Dr. Kayandabila, the Deputy Governor from Bank of Tanzania, for the closing remarks. Once again, thank you all for your participation. And we will now proceed for lunch. The venues for lunch as follows. The VIP will have lunch at Oldonyo Lengai Hall, while the other participants will proceed to Lake Nyasa Hall for lunch. Or otherwise, the venues are as we had this morning. Ladies and gentlemen, for those traveling out of Arusha, we wish you all safe trip back home. And since today is an International Women's Day, we will proceed to lunch with a song from the DJ. The DJ, please play the official song for International Women's Day while we proceed for lunch. Thank you all.
I'm a superwoman. I'm a superwoman. I'm a superwoman.
Our research shows that your thoughts can make you sick. And the question is, if your thoughts can make you sick, can your thoughts make you well? That's absolutely possible. And it's easy to learn. So when you wake up in the morning,
Dr. Joe Dispenza,
researcher and best-selling author. One of the most sought-after speakers in the world.
All with the aim of helping people better understand and unlock the power of their mind.
I'm concerned about human species.
Why?
75 to 90% of every person that goes to a healthcare facility goes because of psychological or emotional stress, and it gets addictive to people. They need the bad relationship, the bad job in order to feel. And there's so much research to show that when they analyzed their life within some disturbing emotion, we saw that they were actually making the brain worse. But 50% of that story isn't even the truth. People are reliving a miserable life they never even had just to excuse themselves from changing. You can't wait for your wealth to feel success. You can't wait for your new relationship to feel love.
95% of who we are by the age of 35 is programmed.
Yeah, but there is a way to change. And so the model of change is breaking the habit of the old self and reinventing a new self. But if you teach people how to do that, in 7 days you can see very significant changes. So try this out as an experiment. First thing you have to do is...
Dr. Joe, you're someone that's constantly doing research and developing new ideas about the way humans are and the way the universe is. What are the beliefs in your head that you're too scared to share?
Oh boy, I have a very strong belief that...
Before this episode starts, I have a small favor to ask from you. 2 months ago, 74% of people that watch this channel didn't subscribe. We're now down to 69%. My goal is 50%. So if you've ever liked any of the videos we've posted, if you like this channel, can you do me a quick favor and hit the subscribe button? It helps this channel more than you know, and the bigger the channel gets, as you've seen, the bigger the guests get. Thank you and enjoy this episode. Dr. Joe, 95% of who we are by the age of 35 is programmed. When I read that in your work, it kind of hit me like a ton of bricks because I just turned 30. And if what you're saying there is true, without realizing it, there's a puppet master that sits above me that's calling the shots in a way that I don't think I've realized. Is that true?
I think if we define a habit as a redundant set of automatic, unconscious thoughts, behaviors, and emotions that's acquired through repetition. A habit is when you've done something so many times that your body now knows how to do it better than your conscious mind. Then it's programmed subconsciously. So that when the body knows how to do it better than the conscious mind, then for the most part, the greatest habit we have to break is the habit of being ourselves, right? So there's a principle in neuroscience that says that nerve cells that fire together wire together. If you keep thinking the same way, if you keep making the same choices, if you keep doing the same things, if you keep reproducing the same experiences and feeling the same emotions, your biology begins to become hardwired in a sense. It becomes programmed. So in order to change something, to arrive at a new vision of your future, if you wanted to arrive at a new goal or new vision of your future, you'd have to change something about yourself in order to get there. And you'd have to change the way you think, the way you act, and the way you feel. When you begin to become conscious of those unconscious thoughts, so conscious that you don't let them slip by your awareness unnoticed or unchecked by you. If you catch yourself speaking in a limited way, or you become conscious that you're behaving in a certain way, in a habit, and you can notice or pay attention to how you're feeling, then you're no longer the program. Now your consciousness observing the program, you're only unconscious when you're in the program, and so to change then is to become so conscious that you don't go unconscious again. And in a sense, that is consciousness, that is really the puppet master that really decides who we want to be. I think the biggest problem is that people lose their free will to a set of programs. And so their body is basically programmed into a predictable future based on what they've done in the past. So to change that habituation takes an enormous amount of energy, an enormous amount of awareness.
Why is this operating system, this program, useful? Because I look at everything the way that I do, and from doing this podcast and speaking to experts, I've stopped thinking that my body is against me, and I've started to realize that there's a reason for these things. There's a reason for the habits and patterns, and so why is this useful? Because it seems to be working against me in so many ways.
Well, first of all, when we look closely at certain habits, whether you can ride a bicycle, whether you can speak a language, whether you can snowboard, when you first learn any of those things, it takes an enormous amount of conscious awareness to get your body to do what your mind is intending. But if you keep doing it over and over again, then the body begins to economize it in some way. And so we have a lot of things that we can do automatically or unconsciously or subconsciously that allows us to multitask, to drive your car, to talk on the phone, to do several different things at the same time. So a habit isn't a bad thing. They can work for you or they can work against you. The problem is if you're, as an example, complaining and blaming and making excuses and feeling sorry for yourself and judging other people, and you practice that and you get really good at whatever you practice that enough times that you're unconscious to the fact that you're doing it. The moment you become conscious that you want to change that, you're going to be uncomfortable. It's going to feel unfamiliar. It's going to feel some degree of uncertainty. You're leaving kind of familiar known territory and you're stepping into the unknown. And so many people, when they want to change a habit, they have to be willing to be uncomfortable to do it. But habits can work for us. There's a lot of great habits that you and I both have that I would never want to change or would want to evolve in some way. But then there's a lot of habits that don't serve us. And so a person really wants to set a vision of the future, whatever that is, and they just have to agree that in order to arrive at that vision, they have to change in order to get there.
Someone said to me that there's a certain type of behavior pattern that we can't change. They said when we get trauma under the age of 10, things that happen at a very early age, some of those things cannot be changed. And then there's things that happen later in life that can be rewired and changed. Is that true? Are there some traumas, behavior patterns that just appear to be too stubborn and too resistant to change?
If you asked me that question just a few years ago, I probably would have a different answer than I do today. Because if you look at a lot of the work that we're studying in terms of human change and human transformation, we've seen people with really difficult pasts, really brutal pasts that were abused and traumatized at a very early age, and then repeated traumas that took place in people's lives. And they had night terrors, and they couldn't be in relationships. They had social anxiety. They had a lot of health conditions. We've seen them completely change to be happy people again, to free themselves from the past. And so I would never put a limitation on change because I just don't think you can really predict that. I think many people that are learning how to change and they understand what they're doing and why they're doing it and how it gets easier, I think for the most part people can change all kinds of things. And when they do change, our research shows that their brain changes, their heart rate changes, their gene expression changes, there's thousands of metabolites that are being released into their bloodstream that weren't there prior. There's a host of different changes that take place biologically that kind of support the person's transformation.
Is there a specific transformation that sticks in your mind as being the clearest evidence that you should never write off someone's ability to transform?
Wow. I'm so pleased to tell you that my beliefs have been challenged just in the last 2 years in witnessing so many different changes in people's health that I never knew was even possible. Everything from stage 4 cancers that were in a very progressed state that metastasized to organs and tissues and bones in the body, a complete reversal in in that health condition. Not once, not twice, not 3 times. We've seen it many times. We've seen people that were blind, that have been deaf, that have ALS, that have lupus, that have MS, that have Parkinson's disease, that have spinal cord injuries, that have strokes, PTSD, myasthenia gravis, cystic fibrosis, muscular dystrophy. We had a woman that had her thyroid removed, surgically removed, and I know this is difficult even for me to accept, and grew a new thyroid back. We have the medical evidence for that. So I don't know any longer what the limit is. I think there's something really cool happening in the world when people believe in themselves. And when you believe in yourself, you have to believe in possibility. When you believe in possibility, you have to believe in yourself. So when somebody has the opportunity, and I think a story is, everybody loves a story. There's nothing better than a story. And when someone stands on a stage in front of 2,000 people and talks about their journey to heal themselves from a chronic health condition, and it's not always pretty. They lose things. They lose family. They sometimes lose their careers. They get sick before they get better. And you see this person's persistence, and you see that they were not doing the work, their inward work to heal. They were doing the work to change. And if they understood, if they truly changed, that their biology should change, and they were uncompromising every day in showing up for themselves and staying conscious of their unconscious self, and then reprogramming themselves in some way. When I tell that story, it's the 4-minute mile. It's somebody breaking through a level of consciousness or unconsciousness, and the collective that's observing the example of truth. They're actually relating with that person in a way that causes them to examine possibility differently. And when you become conscious of a new possibility, a change in consciousness is a change in awareness, right? So now it's in the collective. And lo and behold, it's not uncommon. We just had this happen in our week-long event in Denver just a little over a week ago, 2 weeks ago. And we had 6 people stand up out of a wheelchair by the end of the event. Now, I wasn't expecting that, but one person that had MS in the middle of the week had a very profound experience, and a professional athlete, NFL football player, and stood up, and he stood up for the audience, and when he stood up, he said, "I thought I was going to a yoga retreat. I thought my brother was taking me to a yoga retreat. I had no idea what we were doing here." And then he said, I just never loved myself. And it was his act of change that somehow changed his health condition. He somehow upregulated genes in different ways, suppressed the genes for MS, and somehow he was more mobile. He was walking by the end of the event, and he was the magic #1. And when everybody saw that, and the audience was excited, we started seeing other people have a similar experience. Now that possibility is becoming more of a reality for people. So I never limit what could actually happen, but I can tell you